See,
was like, wow.
man, Roku is it's something that
Yeah, I wouldn't have bet on that. I wouldn't have predicted that one.
I don't understand the security, right? There's something about it that the market opportunity is a lot bigger than I think it is. It's just I have the traditional thinking that how can something, I mean, sales is growing like crazy, but how can something like this is not really software, lower margin, increase so much in valuations? Why are we trading at no earnings and price of sales of 20 times? This is bigger than some of the finest software companies out there, right? So, I mean, I'm not saying like the software companies are all the best out there. I'm saying there's discounted stocks, like value stocks, and then there's relative value stocks. You guys know the difference? So actual value stocks is like it's below book value and there's real intrinsic value, right? And then relative value is like it's relatively cheaper, but it's still overvalued.
Relatively cheaper within the same industry.
Yeah, exactly. Like every industry is like overvalued. Like let's say software is all overvalued at 50x price of sales, but this one's trading at 10x, which is still overvalued, but it's relatively less overvalued. So that's relative value when I think about it. So yeah, this one I still don't know. I mean, it's still early, so we could take a look at it. Let's see, Roku S1. Take a look at the prospectus and just see like what is it that their market opportunity.
What happened in this case was their conference call was really good. The way they were advertising it is this quarter's revenue grew a lot compared to last year's same quarter revenue.
Well, yeah, that's
That
typically
made the jump.
yeah, that's typically how we look at it. What was the percentage, if you recall?
But if you compare it to the last quarter,
59% year over year.
Yes.
Yeah.
So I think that's what gave it a boost.
Platform. Okay, so their platform's growing. Yeah, so I do recall looking at this. They have two models for their revenue. One is the platform, and one is the player revenue. So I remember when I was evaluating this, right? The player revenue, if I recall correctly, is the physical, meaning like the physical device that you plug into the TV, and then the platform is actually the software, Roku software. So if that's the case, if they could transition out of the hardware and into software, then I get more bullish. Let's look at this chart right here. This is the most recent earnings, right? We're looking at Roku for people who just came in. By the way, today we're gonna take a break from global macro and we're gonna get really deep into security analysis, especially software security. So we're gonna look at it hopefully in all angles, from technicals, fundamentals, and not so much talk about global macro, but maybe a little bit on gold. But yeah, so look, did you say impressive?
No, you have to.
Yeah. Well, I like both topics, guys. Like, I mean, I geek out to enterprise software just as much as I geek out to global macro. All right, because global macro is like, so enterprise software to me is like the hottest segment in the markets today, at least what everyone kind of agrees upon, based off of their willingness to bet money. But global macro is like where the entire world is going, right? And who's controlling that power in the world. And in global macro, if you know, it's the thinking of the sovereigns, meaning like, you're a sovereign, you print money. You don't think as though like, oh, I need more money. It's, okay, if I inject more money, will they know? And if they know, will they go buy gold, or what would they do with the currency? And then as a sovereign, I would also think about, like human capital. Like, okay, if I open up my economy, will I get more tier one human capital, like engineers, or would they go to China and stuff like that? So, and then I wouldn't even speculate, because I'm not the sovereign guy, right? I prefer to be the enterprise guy. I would speculate that maybe even, they would have a team that would talk about the whole being an economic assassin, right? Where like, okay, if we spark this in their economy, would it cost like a riot or protest or whatever, right? So there are many ways to kind of think about that game, because it's I mean, in the corporate world, in the enterprise world, you compete with each other. There's no life and death, right? But in my opinion, at the sovereign level, there's going to be life and death.
I think it is interesting to look, for example, why silver was going up in price.
Mm-hmm.
I was looking at an article.
The lower yield.
I think people usually compare it to the precious material that gold was going up, that is why silver was going up.
Yeah.
But that was probably not the entire truth.
Yeah.
Right? So what happened was China was actually always short silver. I was always short silver.
Really?
And China actually has, what they do is actually they import silver, and the major portion of their import is part of the byproducts of the base materials. because what happens in China, so when it's actually making silver, it's part of copper or other base materials. So what China started doing in July, right, and that's when actually it shot up because they were actually hedging silver, silver imports, and actually they bought 43,000 COMEX future silver contracts in July.
Okay.
To actually hedge against their, so if economy goes down, what
Yeah.
happens is the base materials go down.
Yeah.
So
Yeah.
that's why if you see copper is actually not
Yeah.
much higher. So that actually affects China.
Yeah.
And that's why they are actually hedging. So actually China is using silver futures to hedge actually their actual imports.
Interesting.
And that is why it actually went up so much compared to gold.
Actually, it went up because you talked about it.
No.
It's like whenever you cover a topic and I don't invest in it, SLV, it's like, what's that? Oh, that's the silver equivalent of GLD. Oh, okay, that's a nice topic. And then suddenly it goes up 5%,
So
and gold goes down, right?
So I talk about it, but I'm sure someone else in here made the position and made it move, not me.
If there was like a K index,
Yeah.
like what topics you cover versus the market, I bet there's like a beta of about 3 to 1
Yeah.
for everything. So.
Hey, I try, man. I try.
So now I think silver is overextended. Silver
It's
will go down faster than gold now.
Yeah. I still have a core investment position. Remember, guys, like I want to capture the full move here, but I trade around it, right? So my core, let's say, is 100% position of silver, but when sometimes it will want to overextend, so I'll get like 150, 200% of my silver position. But when it's overextended like it was, I want to size out and get back to 100%, or maybe sometimes even 50% of my position, because it's like the gains are just too good in a short period of time. Nothing just gets developed in one day. That's why I like global macro again, because it's about theme trading, and it moves very slowly and enough time for anyone to capitalize. Because if you know, sovereigns can't bet that big, right? So sovereigns actually need some time to play a position out. And we were just saying how, what was I saying? Going back to the sovereign topic, right? What do you guys think they care about? Because I told you they don't care about money, right? They care about consumer currency usage, but they don't care about currency needs for them, right? Because what is the sovereign's currency? I know we're talking about global macro. We're just, kind of. It's only 10:02. You guys are early.
Yeah, let's do it.
Yeah. So let's do it. So if you think about it, what they care about is resources, right? So the assets or the equity for sovereigns will maybe currency, but I'd say currency usage, right? That's important to them. Resources like commodities, extremely important to them. And the tug of war for commodities, right? Meaning like, okay, like Russia is good with oil, so we need to buy from them or whichever. So those are things that they think about. And the other thing I think about too is that now correct me if I'm wrong on this, but I think the U.S. ourselves made Saudi Arabia extremely rich, right? Because if the whole world operates on the dollar, and the dollar's priced against the oil, petrodollar, then we devalue the dollar like crazy to protect the economies, our economy, maybe around the world. Well, we made their resource far more valuable, and then they sell it to the rest of the world.
But now if you see, that is changing now.
Mm-hmm.
So if you see now, compare the differential between the Brent oil and the crude oil,
Yeah.
WTI,
Yeah.
primarily US,
Yeah.
differential is now less than $4,
Yeah.
right? Earlier it used to be $8 to $10.
Yeah.
So now people do not see need of actually buying US oil anymore.
Yeah.
Right? So I think now they can actually buy Brent for a very
Yeah.
similar price.
Yeah. So there's actually a we'll get into a little global macro. I guess I want to start right now. Maybe we're kind of getting ahead. I don't, because we're already on the topic. That's why I want to start and say it, but I want to hold back because it's kind of like over here. Okay, so if you think about it, the price of oil, right? The situation today. I mean, I'm not much of a strong oil analyst, but I kind of understand the resources. Okay, enough to kind of talk about it. Today, the U.S. can produce its own oil because of shale technology.
US is now net exporter of oil.
Which is amazing.
Which is amazing, right?
Amazing.
So for U.S. to benefit greatly, they need higher oil prices just as much as Saudi Arabia, right?
Yeah.
But because of shale technology, we could produce even more oil. then now there's too much supply of oil.
But the problem with shale technology is very rarely profitable. If you see most of the companies which have gone bankrupt,
Maybe because the prices are so depressed. Yeah.
Yeah.
So look. So think about that. Hold that thought. We're already getting into it, right? So the government right now has incentive to hold up the markets, meaning they do that by devaluing the dollar. And if they devalue the dollar, they get the markets to go up. If the markets go up, people experience capital gains. What happens when you have capital gains? You pay capital gains taxes, right? So they could engineer their own income. They don't want the stock market to drop. So now you're playing the trade with the government. And we're in a situation where I don't think anyone in the world wants the stock market to drop because sovereigns can't charge their capital gains tax.
But if you now compare stock right now, S&P is within 2% of its all-time highs.
Yeah.
Versus oil is not.
Yeah. So I was gonna finish and add that if they devalue the dollar, that helps equity prices or risk assets they call it. So stock prices go up, but also commodity prices go up, right? So this would actually save the U.S. oil industry sector.
But I think for that is actually different, right? Because that is demand and supply, right? So why is oil still down, right?
Yeah.
Because of the concerns of the trade war. I think it's mostly because of that, right? And now if you see oil will become less in demand because now electric cars are coming. If you see China is investing more in electricity, electric cars than right, US.
Yeah. So I agree with you.
And natural gas is an alternative as well.
Yep.
If you see natural gas, I think if you look at natural gas right now, that is, I do not know what is the reason it's now actually going up. From last 1 month, it keeps on going up. I do not know why.
Yeah.
Right? So seasonally, I think it's the right time to get into natural gas.
Yeah.
But
So I'm known as the enterprise guy, right?
Right.
But if we keep talking about commodities and FX and currencies and derivatives and all that, I'll probably eventually be the sovereign guy. And I'll draw out market structure for, I know some new people, so I'm going to revisit that topic because it helps to kind of develop an understanding of market structure and you kind of see where you could invest, right? So the reason why I call myself the enterprise guy is because this is how I view market structure, right? At the very bottom, people call it, retail or average Joe. So I put average Joe as just average Joe or consumer. So the consumer within this segment, you could break up the consumer segment into ultra high net worth individuals, meaning they have more than 30 million in net worth. And if you go a little bit lower, you have H and W, high net worth. This is about 1 million, 2 or 3 million, I forget. And then you go lower, it's just like the middle class, lower class, etc. Right? So that's the consumer. You go a little bit higher, you get middle SMB. So if you guys go out to restaurants or cafes and stuff, those are SMBs. Now you could trade in that segment as well, right? Valuations change as we go up as well. And then we have middle market. Middle market to me would be a little bit more bigger businesses, maybe like 100 employees or, is it 100 employees? I forget the numbers, but they're making, let's say, more than 1 million, right? And then you go even higher, you get enterprise. And I would even argue that within enterprise, today, knowing the kind of landscape, hey, welcome. Oh, I thought you were a realtor. Oh no, okay, never mind. Okay. I saw someone that looked like you walking over there. So if you look at enterprise, right? Within enterprise, I like to segment it out. There's upper enterprise, which everyone knows. Upper enterprise would be like Apple, Facebook, Google. These are like 100 billion plus. And then lower enterprise. Lower enterprise would be, not lower. SME, small and medium-sized enterprise, and then lower enterprise. All right. Is that right, or is it the other way? Upper, whichever, right? So SME, it's the other way.
Probably.
Yeah. So upper enterprise, Apple, Facebook, Google. Lower enterprise would be like VMware, where it's not 100 billion, it's like 50 billion. I'm sorry, you're right. It'd be the other way. And then below that is SME. SME is like startups. Startups that have the potential to be an enterprise company, to be a global company, right? So when we talk about venture capital in here, people don't invest into, VCs don't invest into cafes and restaurants, right? They need that global exposure to really call it enterprise.
One thing you've said, Kay, though, is that a lot of companies, the foundation of their value is on helping people save time. Okay, because time's the ultimate.
It is.
It's limitless, right? You cannot get it back.
Yeah.
So, I don't know what gate I have to go to the airport. I'll look at my Apple Watch, it'll tell me it's gate 16. So rather than having to spend 10 minutes looking at it, I spend 10 seconds. I got 9 minutes and 50 seconds back in my life, right?
Yeah.
So all these technologies,
Yeah.
people in this room are too young to remember that there was a gas shortage where people had to wait in line. If there was a Nobel Prize for countries executing in the world of oil, the United States would be the frickin' winner I've ever seen.
Yeah.
The problem of people here having to get gasoline doesn't exist.
Yeah.
The United States has solved that problem where it's $3 a gallon here,
Yeah.
and it's $6 in Canada and $8 in Europe.
Right.
It's a problem that we won't even ever have to deal with anymore,
Right.
let alone deal with countries, Iraq and Iran, all these countries you don't even want to really talk to if you didn't have to.
Right.
All this oil problem is gone. It's amazing. And what it does is, if you think about it,
Yeah.
it frees up people to spend money elsewhere.
Yeah.
And now you combine them with unemployment, you get people that don't mind dropping $400 on an Apple Watch that you don't really need,
Yeah.
but
yeah.
you'll buy it anyways.
Yeah.
And you don't really need a new tablet computer every 2 years, but you buy it anyways.
Yeah.
And what people are doing now is figuring out, it's September, last Christmas was the biggest frickin' success in history.
Yeah.
Right? I mean, every company did the best sales ever, right? And so the question is, if the economy keeps going,
Right.
and all this tech keeps going, and new
Right.
stuff, and Apple's
Right.
going to announce some new crap next week,
Right.
all that kind of stuff, is it going to be another November, December, no matter what industry you're in tech, you're going to go through the doors. Amazon, Walmart, Target, they're going to be shipping crap as big as they've ever seen,
Yeah.
which drives FedEx, drives UPS, drives the whole machine.
Yeah.
All because people now have more money to spend than they've ever spent in their life.
Yeah.
And that's why the economy drives any company like Roku. Boy, I don't want to go to the store and buy some frickin' DVD anymore. Oh, look, I turn the TV on and it's there.
Yeah. Yeah.
So I mean, like all this time, if you could go now to every company and figure out which companies are going to be the ones that save you the time, save you the money,
Yeah.
where people are going to spend the money that they've got money to burn, you'll do, and look at that company, 50+%
Yeah.
growth year over year.
Yeah.
That's amazing
Yeah.
to see companies that are growing at that level that you as a shareholder are now part of.
Yeah.
I mean, that's amazing.
Being an equity holder is the most powerful position in my opinion.
Yeah.
And I love the energy and passion, but you're right, the economy is evolving. What people, our legal system's completely outdated, man. Like, I could probably go on about this. If you think about, like, just like HR and employers, right, today, man, I don't even know where to start. One is overvaluations through the roof, meaning they say, 100 years ago, or whatever, when our country started, was it the ratio between the executive pay or business owner and the employee, the wage people, was about 100x. But the 100-year average is like 10 to 15 years or whatever, or at 10 to 15x, right? But today, because of overvaluation, cheaper dollar, it's 100x or 300x. Does that kind of make sense? What I'm saying?
Yeah, absolutely.
Like today, the executives are getting a lot richer because of high valuations versus back then, and so it creates instability, right? So that's one part. The HR part that I want to talk about is that technology is advancing so quick that the legal system can't catch up in a way where we're working like 100x harder because of technology, right? Think of like automated things, like automated dialers and all that, right? You're doing a lot more work, but it doesn't fit into when the legal system was created.
Okay, so look at your
Right.
industry for real estate.
Sure.
If anyone's ever bought a house,
Sure.
you have to sign literally 50 things, which is crazy. You sit in that
Yeah,
office over
yeah,
there,
yeah.
and there's a stack of paper, and you have to go through every stupid paper form to sign it 100 times.
Yeah.
And we all know how stupid that is.
Well,
The
there's
same thing.
DocuSign. I don't do that. I use
No, but you
DocuSign.
still have to do it 50 times though.
Yeah,
But
yeah.
there was a time,
Yeah.
not that long ago, where if you wanted to be a taxi driver, you had to buy a plate for your car for $50,000 to $100,000, where people in this room were thinking, are you insane? I could turn my car into a taxi for free.
Yeah.
So I mean, all that nonsense of having to bid
Yeah,
in an auction
yeah.
for a plate doesn't exist anymore.
That's what I'm saying. We technology is evolving. The economy is changing it quick. And I tell you guys, look, we step into a stranger's car today when we wouldn't do it 10 years ago.
But if you buy a car
Right,
in
because of
Dubai,
Lyft and Uber. But we do even more than that. We accept food from strangers.
right, but if you
DoorDash.
buy a car in Dubai, you can
Right.
buy and get it out of the dealer in 15 minutes.
Yeah.
Here you still are signing 50 pieces of paper with the extended warranty, all this crap,
Yeah,
right?
yeah.
With the house industry, why can't your real estate, if you could figure a way for the real estate industry to simplify itself, you'd become the most famous real estate transformer in the history.
Yeah, that's why I'm bullish on like Zillow, but not right now.
Yeah.
Right. So that there's discussion around all that. I know where I'm pretty confident now where things are moving. I'm just trying to figure out how to position the timing and all that. That's really where it's at. But let's finish this topic and then jump into this. But I agree. Today's worker is so much more productive than yesterday's worker or the worker of previously, and the legal system is not updated to measure that amount of work, right?
Yep.
So now today I feel that, remember, as a business owner, you're more beneficial than a employee. One is inflation, right? Because if you're a business owner, you're selling, like I said, you're selling a cup of coffee for $3. Inflation kicks in, you're selling it now for $6, right? And then while you're selling more versus $3 cup of coffee, you're selling $6. You're trying to charge your employees less, but they're trying to ask for wage growth. So this is just standard stuff, I feel.
Right.
But today, with technology, is making the business owner, the employer, a lot more powerful. All right. So let me just finish this right here. So we talk about enterprise, middle market, SMB, average consumer, and the different segments within. At the very highest is sovereigns, because they're the game maker, right? They print all the currencies and stuff. So at the sovereign level, we talk about forex, resources, commodities, and stuff like that, oil and gas. Everything over here, so I like to call myself the enterprise guy because I don't want to go up there. Because once you get up there, it's, like I said, it'd be life and death situations. This is as far as I go. You could probably go even higher than sovereign, right? If you're like religious, you believe in some divine, but I don't go there either. Okay, so guys, we'll get started here. There's a lot of new faces. Do you guys want like an introduction of like what this investment club is about or what we do? Sure. Your first time, right? Okay. Few people first time. All right. Well, welcome. I'm Kay. I like to call myself the enterprise guy, simply because if you go out there and network with people long enough, you realize people can't remember names. So it's just again a psychological tactic, and you see celebrities use it. Celebrities and singers use it today, right? So think of like Lady Gaga and stuff. So I use that in the tech space just to kind of, get the word, get the name around. So. That's the answer on that. So anyways, I've been running this investment club for 2 years and 8 months now. We do it every Sunday. We talk about everything end-to-end in finance, investing, economics, technology. It really evolved. It started off as a stock market group, but just, I don't know, it's just over time you learn more and you evolve it to the next level. So I try to keep this investment club on the edge by just focusing on latest topics. So it's, to me, an alternative investment club, not so much a traditional investment club. So if you go to a traditional investment club today, they'll talk about stocks, bonds, and real estate. That's it. That's traditional asset class. You come in here, we talk about alternative asset classes or alternative investing. So everything from options trading, shorting penny stocks, microcap trading, commercial real estate, small business acquisition, real estate transactions, commercial real estate cap rates, did I say venture capital, private equity, anything. So we go pretty broad, but yeah, that's a little intro. So welcome, guys. Today's my lecture number 131, and we're going to talk about deep SaaS equity research. So today we're going to be focusing a lot more on stocks. Last week we focused a lot on global macro, so we talked about gold, what the sovereigns want to do, and where the big market movements are. But today's going to be more focused on a handful of great software companies that I like. And then we're going to talk about earnings analysis for SaaS and trade ideas as well. How's that sound? Yeah.
Is there a way to get some of your last week's material?
Yeah, so just shoot me a text. Shoot me your name, so I have your name, and I'll add you, and then I'll send you the material. So that's how we're doing it. Any other questions? Okay, all right. Quick announcement. This Friday, I'm hosting Silicon Valley Networking Mixer number 18. So on top of this investment club, I also do networking events. So this is the flyer for any of you who wants to go out and network. Some quotes to kind of pump you up and why I network, right? Surround yourself with positive people who are going to push you towards greatness. But this one's actually my favorite right here. And this is from sent by SK Sachin. He's one of the investment club members here. The richest people in the world look for and build networks. Everyone else looks for a job. Right? Because the more I taught in here and you think about it, there's only 3 ways to make money. And I know I sound redundant, but for the new people, there's only 3 ways to make money. You go to work, you start a business, or you invest. If you go to work, you want to make more money, well, you climb the ladder, right? And you put more hours for less money, in my opinion. And then you know, if you want to make even more money, you start a business. But how do you excel at starting a business? To me, and this again always sounds provocative when I say it, I don't find there's much intelligence in business required. I mean, more sophisticated business, yes. But in general, if you want to succeed at business, the main thing it takes is a network. The more people you know, it's all mathematics, right? The more people you know, it kind of trickles down to your closing funnel. If you understand sales pipeline, right? So, for example, if I were to draw a funnel like this, right, and it's 10 people in my funnel, every 10 I get 1, right? So if I want to scale my business, I go to 100. Now I got 10 closed deals. So it's a mathematics game. You just go out there, meet more people, and meet the people in the right segment. So if I go revisit last week's discussion, what was the quote that I put? I said, business is basically a formalized group of individuals tackling an unorganized group of people called the markets. Right? So businesses make money from markets. So that's the second way to make money. And then the last way to make money is investing. If you ask me what's the best way to become a great investor, it's about information, knowledge, right? And going back to Bernard's point, like being an equity holder is probably the most powerful position one could be in this modern day, right? Because as a business owner, you own a business, right? It costs time for money. But as an equity owner, which now you're an investor, you own the equity, the shares, you kind of sit on time for the money to make itself, right? And if you know how to bet with sophisticated instruments, you could get pretty wealthy substantially. So, like I said, there's 3 ways to make money. I'll draw it out right here. Can you guys see it? Right? So, working, business, investing. My goal eventually, well, right now it looks, like business investing. So my goal is going to be something like this, and then ultimately I just want to be like that, right? Some people.
What is that last one?
Investing.
Investing.
Sorry, my ink wore out, but there you go. Right? Some people it's just W. Some people it's just work, but they don't understand the dynamics of the economy, how they devalue your dollar and all that. So it helps to know. So some pictures from the networking event, in case you guys are curious.
Wow,
That's
that's
what.
huge.
Yeah, it's getting a lot bigger than last time. So. What's on your mind? You're just kind of like you're looking at it, you're smiling. I'm curious. What's on your mind, Bernard? Huh?
Jeff Bezos, was he there?
No, he wasn't there.
I saw his pictures. I was like,
He's mad because he couldn't get in.
Yeah. So for those of you who are new, my burning desire number 2 is actually to be now. It came after this investment club, but the burning desire number 2 for me is to be the most well-known guy in Silicon Valley for tech, startups, entrepreneurs, founders. Not so much consumers, right? My burning desire number 1 is actually to be a world-class investor, and so to do that, you actually have to put in the honest hours. So this is that activity itself. So let's get started. I normally like to start with quotes, and today I have a lot of quotes for you guys. Just because I saw it online and I was like, hey, this is just too good. I can't not share it. So, so this is Jeff Bezos right here. He didn't go to my mixer, by the way. My greatest advice for you: if you never want to be criticized for goodness' sake, don't do anything new. Right? If you ever want to do something new, like last week I was telling you my story about how I think we all have it, but I had very bad aggregate social bias, right? Where I couldn't make a decision because the herd was so much bigger than me and caused me to be insecure. But through teaching these lessons, learning about the markets, learning about human emotions, collective human emotions, now I could decide against it, right? So I'm not going to miss Bitcoin and all that again. Yeah. So that's Jeff Bezos right there, worth was that 100? Well, at that time, 110 billion.
Yeah.
All right. If you're laughing at that, I should show you the Bloomberg riches. Let's see, Jeff. Let's do this, Jeff Bezos. This is actually pretty funny. Here's the Bloomberg index, and you're gonna see this gap down right here, right? Wait, what? No way. You reach your free article limit. Okay, well, that's new. Well, let's see if I can refresh it. So you saw that gap down, right? That little gap down right there. That's from a divorce. So, but the funny part is that he got divorced, lost that much money, it gapped down, but he's still the richest in the world. So that was sort of the joke, right? But yeah, that's Jeff Bezos. You go down. Here's Bill Gates. My greatest advice for you: don't compare yourself with anyone in this world. If you do so, you are insulting yourself. Right? The more I interact with people at scale, this is interaction at scale, right? This is one to many. It's not one to one. Yeah, I start to see the different personalities out there, the different type of people out there, and I would say I know how to pick out people like fine wine, even though I don't know how to pick out wine. As an example, it's the people to me today that put in that extra effort, right? It's not about the money. Once you get over the money, you think about the other qualities, like how they spend their time, their decision-making habits, how they treat other people, right? So to me, a world-class individual is anyone with let's say deep pockets is a plus, but if you got deep pockets and you treat everyone equally, that to me is world-class. So I'd like to meet more of those people. So that's Bill Gates. Over here, my greatest advice to you: luxury goods are the only area in which it is possible to make luxury margins. Isn't that interesting? Right? Like, it makes me think about the marketing and the justification for charging that price. But yeah, another billionaire. Warren Buffett. The difference between successful people and really successful people is that really successful people say no to almost everything. Yeah, up to you to think about that one. Mark Zuckerberg. Books allow you to fully explore a topic and immerse yourself in a deeper way than most media today. Right? And I don't know where I read this, but I can't find I saw a bookmark or whatever. It says a man or a person who lives and reads no book or doesn't do any reading in a lifetime. Or I'm sorry, a person who doesn't read a book only lives one lifetime. But a person who reads many, many books lives many, many lifetimes.
Yeah.
So another nice quote. And sorry, I got a few more. Innovation and constant improvement must be on being the motivating idea of our generation throughout the 21st century. It'll end soon. Never give up. Today is hard, tomorrow will be worse, but the day after tomorrow will be sunshine. Check them off. And then this one. When something is important enough, you do it even if the odds are not in your favor. Right? So, anyways. Thought-provoking questions. Do billionaires really earn billions of dollars, or is it just all capital gains? Realistically, I think it's mostly from capital gains, right? Because if you measure out your lifespan and what let's say you own a business or you go to work, right, and you actually measure the time that you're born till the day that you die, and then you try to fit 1 billion into that, how realistic is that? So I'm starting to realize, like, the real way to become a billionaire after a while now is actually to hold a lot of assets that everyone else in the world wants, and will pump up the price. So that's my philosophy on that. To get to 100 million, it'd be through holding some high amounts of equity, and people are just trying to buy it for a high price. Yeah. Okay. Anyways, any questions? You guys are kind of quiet today. Huh?
Which kind of equity?
Huh?
Which kind of equity?
I mean, so equities means ownership, right? So shares. So you could hold anything, any asset. Sovereigns hold physical assets like resources. So that's anything that society perceives of value and are willing to pay for it, right? So do you perceive Amazon shares as valuable? At least because of our system, our games of the rules of the game that we have, we agree that Amazon shares have value, right? Even though, let's say you decide to be different, you say it doesn't have value, but other people will bid and the measure of our time is the money we make. So
There's a saying, Kay, that the wealthier you are, the more you focus on living under your means, whereas people who don't understand that spend money beyond their means. Bill Gates uses coupons. Warren Buffett eats at McDonald's. Bill Gates owns a 4-year-old Volvo.
Mm-hmm.
I mean, he could have 10 Rolls Royces, because he could have anything he wants.
yeah,
But there are people here who don't have money, who spend $4 on a Starbucks coffee that you could instead have at home for 10 cents.
yeah.
And you multiply that by the 10,000 copies that you have, there's your house down payment.
Yeah,
And
dude.
so
So
you learn how to live by watching how people, spend.
yeah, I like to ask you guys, like the audience, for some wisdom here, right? So before I came in today, when I came in today, Aaron came in like 45 minutes early, and we had a chat. Was it 45 minutes? Something like that. We just kind of had a chat, right? And I was just telling him, like, it's not so much about the more money you make that it's gonna make you happy. You might want to like chase other intrinsic things, right? Because I always think about the quote that I tell you guys, and I think Raj in the back really liked that one. It's the whole, if you want to be happy for an hour, you take a nap. You want to be happy for a day, you go fishing. If you want to be happy for a year, you make a lot of money. But if you want to be happy for a lifetime, you go out there and help somebody. So that's been like the fundamental principle for me, or the value system that I have, where it's like whenever I feel lost or distressed or whatever, just go out there and help somebody, and you're kind of like, oh, okay, I figured it out, right? On the other hand, there are people who don't know what they want to do, and they ask me for career advice. Some of the advice I give them is, you could go out there and clean up poop, right? It's something you don't like, but the beauty of that is that you figure out one thing you don't want to do. So it's sort of a joke, right? I tell people like just go out there and do something that just go try something, and you figure out by trial and error. It's called testing, right? In mathematics or science, it's called testing. But in real life, it's called failures and success. So you have to keep failing to find success. But yeah, I wanted to ask you guys, the audience, like, what are things that, like you're chasing money, right? And the more I observe, speaking to people, talking about the dynamics of money in here, like I see that 99% of the world is chasing money, but like what happens when you're done chasing it? Huh? No?
In my opinion,
Too big of a question? Okay.
if you ask me,
Let's add it.
Okay, all right. Maybe we won't go there. We'll just focus on stocks today. All right. Okay, guys. So all right, try to get like a little different. Okay. Anyways, let's start with it. So again, guys, last week we talked a lot about global macro things going on around the world. Today we're going to slim that. We're not going to talk so much about that. We're going to focus really on micro stuff. Look at stocks and just deep analysis of securities. If you guys have any questions, feel free at any time to let me know. But yeah, let's get started. So quick market update, some thoughts. So you guys know this week, based off of last week's analysis, I didn't know which direction really we were going. We're kind of holding the 100-day moving average, but today we're clearly above the 50-day moving average. And I'm just going to do a quick broader market analysis right now. So we're above the 50-day moving average. It looks like the market wants to go up, right? And I'm just going to play that direction. Sometimes you just have to suck it up and play the direction. You can't complain. Some comments, some thoughts that I have. It appears that the markets want to go higher this week, with the majority clearing the 50-day moving average. The majority as in the indices from the NASDAQ, S&P 500, Dow Jones, and so forth. We'll watch to see if this line in the sand will hold. So I'm simply just looking at that next, the 50-day moving average. That's all. I keep it simple, right? So these are all 50-day moving averages. How important is the stock market to the government and economy? Now, we talked about this already, but I'm going to bring it up again because we were kind of jumping ahead in our conversation. I think the stock market it's becoming extremely important to the government because as long as the government can keep pumping up stock prices, it creates capital gains tax, which is ultimately income for the sovereign, income for the government. But we don't think about that, right? We think about it in terms of like, oh, we have capital gains until we get taxed, until we pay our taxes on it. So how does the government benefit when you have tax deductions from a capital loss? Right? They don't really make money. Thus, governments have to have the incentive, I put inventive, have the incentive to start QE again, to push and hold up markets, or really to push and hold up capital gains tax revenues. So I think if that's the case, then we're going to move into that next segment. Like the economy right now is looking kind of poor, but it seems like the government's going to do whatever it takes to hold it up. So we're going to do new forms of like QE or monetary policy. Monetary policy basically means we're going to manipulate the economy to hold things up with the money supply. And so I think the new form of monetary policy, and we've never done it before, is actually going to be pumping up stock prices. Isn't that insane? Right? Because the other tools are broken down, right? Interest rates are at zero, right? We're already printing a lot of money. We could do more QE, but what are we going to buy with QE and all that? So.
Another question is, are we in a bubble or will we be in a bubble?
So I know this is your second time coming here. The bubble that we talked about this year, or this time around, so in 2001, everyone knows the dot-com bubble, right? 2008 was the real estate derivative contract bubble, meaning it was tied to real estate at the core, but people were trading options, several layers of option contracts of it, which created a bubble around the whole world because they were distributing that that secure real estate asset, right? And so today in 2019, we have a chair over here, if that's okay. Yeah, you're welcome to just come right on in. No worries. It's on the second row. Yeah, so if you talk about today, 2019, 2020, the bubble today, at least from my research, is from corporate debt as well as corporate buyback. So it's the whole environment of easy money. That's really the key here. So whenever we have easy money, it creates economic imbalances. You guys understand what economic imbalances are? One example I always use is that you prolong your workout periods until one day you're like, all right, if I don't work out, I'm going to die. Right? So that's the same thinking I apply to economics, where if we just keep having easy money, we push the problems down the road. And that's really the reality. So when they issue easy money for consumers, right, the bottom part of the pyramid right here, they go and buy homes. And so you see home appreciation, right? But for the more commercial enterprise people, when there's easy money, they lever up, right? They borrow money, their debt increases, and what are they doing? They're buying back their own shares. So they're increasing valuations in a sense. But now that I see the whole the whole cycle, the circle of life on this, governments are printing more money so that the funds will be allocated to the best, and the best will pump up their stock prices so that the government can make more money. Right? So this has been happening for more than 10 years now. So it's created a lot of economic imbalances, right? And one that you probably already know, it's inequality. Right? It's you have to think about the generational stuff. The silent generation, the baby boomers, the X, the Y, and the Z. Generation X right now, a lot of people in here, is it easy to afford a home? Not a lot for a lot of people. Right? So these are economic imbalances that are being created through easy money. And the other issue is that it's becoming so stretched that if you don't participate in investing in the stock market, the world actually leaves you, because your income gets decayed. Right? So if you don't play today, you become poorer and poorer every day. That's the crazy part. So it's forced its hand because interest rates are almost zero, right? Real interest rates are like really low. So I don't know what else to say. Like I always tell people that you guys don't understand. Like you could stand still. You could say I won't. I have enough money. I make enough. Whatever, right? But what you don't know is that you're actually standing on an economic train that is going to move without you. It's always moving. The floor below me is moving. Why? Because, this is just a small, amount of people in a room, right? But what happens outside, there's people hustling to get further in life, right? So if people are making more money through corporate stock options, they're going to bid up home prices. And if you stand still, well, you can't afford the home.
That's right.
Right?
Exactly right.
So most of the home prices are derived from corporate valuations.
Yeah.
So if you just analyze the mechanics of how home prices go up, home prices go up because of the consumer's ability to bid up prices, right? But how are we able to bid up prices? Because we go to work for a company, and if that company pays us even more, then we could bid up even more. But how would that company pay us more? That company will pay us more because it's in a hot industry like software, enterprise software. So if they pay us more, then it kind of kicks down. You see the trickle-down economics, right? So now on top of that, executives could buy even more if they could keep pumping up real stock prices by buying back their own shares. But buying back your own shares becomes a double-edged sword, because the moment the shares go down, the corporations get hit really hard, right? Versus if the corporations were in cash. So that's the key thing to look at here. If there's if there's record levels of corporate share buybacks, and we get massive stock market declines, corporations actually get hurt pretty bad. So that's the bubble today. Right? The bubble today is the corporate debt, corporate buybacks is just out of control. To add on top of that, it's also sovereign debt and sovereign printing of money. So massive devaluation of currencies, which causes massive inflation of asset prices, real estate, and all that. So if you go on my software over here, right, and I show you some homes, people who bought a home in 2009 to now, 10 years later, they doubled. They bought it for 600, it's 1.2 now. Isn't that insane?
Incredible.
Right? So to think that if you take a position today, you're going to experience that huge wealth move again, that might be greedy of you, right? Like another 600K move, but judging from the the distress nature of sovereigns around the world, I think that might just be the case. Because if we start printing money and put it into stocks, well, you know it's going to kick back to real estate prices. So we're at a period now where the heart of the economy is cornered into the stock prices. So that's why I'm saying now more than ever, stock prices, S&P 500, is literally the heart of the economy. And we monitor this week after week. And if this declines, then you see the heart of the economy decaying. And this is where things could kind of snowball pretty quick.
But that goes to the point I was trying to make, where I said, I've always felt that stock prices are so high that we're in a bubble right now.
Mm-hmm.
So if you're saying that the government's now going to print more money in order to kick it up even higher with higher PE ratios and all the other fundamentals, then your vision of reality
it's distorted. Everything is distorted, man.
Or
oh my God, yeah. It's completely
building
distorted.
up the balloon higher.
Prices are distorted, okay? Inequality is even worse, and life is put on hold. What do I mean by life is put on hold? Well, you guys all know millennials are still living at home, right? Those are situations. People at 65 can't retire, right? These are like the realities of it. So how much longer can humans put in the effort to make it work? When I say humans put in the effort, I see today it's not one family buying one home. It's like two families trying to buy a single home, or two engineers who make more than 6 figures each buying a home. So how long before the next marginal buyer is exhausted, right? Because that's how prices go up. You always need a buyer to bid it up higher, right? People don't understand that stocks is basically like a textbook that went IPO. Everyone went to college, I'm guessing, right? So you went to college, you buy a book, and once you're done with that class, you sell the book on Amazon or was it Chegg, right? You sell it back to the secondary market. Well, that's a stock. That's what it is, right? The IPO is when the publisher made the book, and then what happens after that, the publisher doesn't know. It's how it's traded on Amazon. So that book could actually go up in value because they're not producing it anymore. And so many people want to learn that content. So that's basically a stock. And so in here, if you understand that concept, that very basic concept, we look at the supply of stock. We look at who are the big fund managers holding stock, the hedge fund managers, to even who are the venture capitalists investing in the stock. We're going to look at a lot of that today. Yeah. Okay. So that's my take right there. It's distorting everything. Go ahead. Oh.
Your server thing.
It's it's another computer. Yep, there you go. I like how you waited until I was done to tell me that. Thank you. Okay, so any questions on that though, guys? My thoughts on the markets this week. It seems like the governments are going to keep it going, and so the more we devalue the dollar, I think gold will be continue to be a strong position moving forward. Gold is taking a little break, but that's the break that I was anticipating. It was deeply overbought. Everyone was just all over it. So that's what happens when everyone. Remember how I said you want to always be away from crowded situations. There's no opportunity in crowded situations. So if everyone is, I need to get a good example of a crowded situation. If everyone is, well, I guess we'll circle back. I can't think of one. Anyways, so S&P 500 above the 50-day moving average, just that line right there, right? QQQ above the 50-day, above 190. That's what I'm looking at. It's looking a little positive. Dow Jones above the 50-day, and yeah, all the same. News this week, USA PMI below 50, recession indicator. You have comments on that one, Raj? I mean, that was like the news of the week, right?
Yeah, but I think the more important news will be coming next week, where we will still see consumers are affected, because the consumer pricing of index is what will keep the market up or down.
Yeah.
And if that continues to grow, I think this will be less of a concern.
Yeah.
And I think that is what we have to see. And I think next week also the ECB's decision, I think will be a very important factor, because if they do not further ease, then I think it may affect FOMC decision as well.
Yeah.
So I think this actually was a factor last week, but it was not alone, because what happened is jobs data was also not so good, but that also could not hold gold's price up, and so it means something else is going on.
So guys, this is just a PMI. It's one of the major economic indicators that we track in here. It's below 50, right? And if you look at historically what happens when it's below 50, doesn't necessarily mean it's true, but let's see, 2001 over here below 50. 50 is the red line right there. I drew it across. And then 2008 over here, right? So typically this is just more decay we're seeing on top of a inverted yield curve. I'm just pointing this out because we got the new updated number and it's below 50 for the first time in a while. Again, we won't be going over global macro too much, so I won't go deep into that. Before we get into the next part, I wanted to talk a little bit about gold, the update on how I see the charts playing out. If you guys recall last week, I was talking about Tocqueville Gold, Capital Management. So they're a large investment company, and I wanted to share just some of the insights that they have. So I'm just going to read out some stuff to you. It's about gold, and then we'll look at gold chart prices. And then we'll jump into the fun part, which is the stocks today. It would be a mistake, in our opinion, to make too little of this price development in gold. We think the breakout is a big deal. It could be an early warning that the global financial order may be headed for significant change. The fundamental macroeconomic analysis for higher gold price has not changed. What is about to change is market recognition of already existing facts and forces that have been long underway. So if you guys think it's the trade war that's causing the markets to kind of go sideways or down, it's not really. It's just natural economic decay, prolonged economic imbalances that needs to correct. And when I say it needs to correct is going back to the demographics, right? If the game doesn't reset, then think of the government as a business owner, and they have a supply chain or a cable, a belt of like. See, I'm not even like. I don't even work with like manufacturing or look at manufacturing stocks, but you guys understand like a conveyor belt, right? And then there's workers who do a certain process and then pass it on to the next. Think of the government as like that, but what they're passing on to the next is they're managing the demographics, the age groups, right? So if the game prolongs too long and there's too much economic imbalances, then if you think about the generation, the silent generation, baby boomer, X, Y, and Z, we keep reproducing every day, right? As a whole world, the population is growing. It's going to get backed up. And everyone's trying to live that lifestyle, ride that roller coaster experience. Everything from going to school, consuming stuff, getting married, and then ultimately death. That stuff's going to get backed up. So I believe that the game needs to reset eventually to kind of keep the game going. If it doesn't, then it's going to be the sovereign's problem. Why should one not consider the possibility of adverse consequences rooted in a decade of manipulated interest rates, radical central bank monetary practices? Manipulated interest rates is easy money. Radical central bank monetary practices, that means they're manipulating the supply of money. This one's making the money cheap. Disregard the orthodox fiscal practices. Historically expensive financial asset valuations, and a bubble in complacency. The current bubble in complacency is so pernicious because it left the investors defenseless by instilling blind faith in the ability to hedge systematic risk with instruments that are vulnerable to risk, to very risk they are supposed to hedge. Now, I know it's a mouthful of information, but it's basically saying that the way they manipulated the money supply, making it easy and all that, is pushing investors to invest in instruments like stocks, risk assets, as though they were bonds. That's my interpretation of it. We believe the recent breakout of gold portends a significant recalibration of commonly accepted macroeconomic fundamentals. Financial market memories are short. Gold is a big macro idea that offers substantial reward for those with the requisite patience. Right? So I'm still bullish on gold, but I guess I'm reading this to kind of help you guys maybe some people got insecure this week with a large gold pullback. It was much needed, right? It was just too heated, it was too hot. But if you think about it, on the positive side, there's opportunity to get back into gold. We'll just have to monitor prices. The Fed put. Belief that the Fed and world central banks can and will underpin serious weakness in financial asset prices by lowering interest rates and quantitative easing. Practices has become an article of faith in the financial markets. Basically, today we think that the governments will save us. We believe that gold's breakout predicts universal discovery of finite limits to the seemingly endless creation of sovereign credit to rescue financial markets short of currency destruction. Fiscal deficits don't matter. This is the government's debt, right? U.S. economic growth can no longer keep up with the expansion of national debt. Should I read that again? U.S. economic growth can no longer keep up with the expansion of national debt. This is why the gold is such a a strong macroeconomic trade idea. A credit downgrade seems inevitable and may already be underway in light of record purchases of gold by central banks and divestment of US dollars. So if you guys know, last week we were talking about how I'm getting bullish on emerging markets. So again, emerging markets, for those of you who don't know, it's like BRIC, like Brazil, India, Russia, China, and so forth. Because if you think about it, they buy gold as well. So it's kind of like buying gold. That's what we discussed last week. No alternatives to the US dollar. The Fed's capitulation on monetary tightening, the dollar's reduced yield advantage versus non-US dollar alternatives, a significant shortfall in purchase power parity versus the euro, and Trump's persistent calls for a weaker currency are very bullish for gold. Again, another mouthful, I do apologize. It's just a little some short stuff I'm sharing from the read this week. Almost done. Mining is synonymous with bad management. Historically, poor management of gold mining companies put their shares off limits for all but high rollers. Interesting, right? We observed significant improvement in important aspects of mining company management, including alignment of executive and employee incentives with shareholders' interests, improved capital allocation decisions, and technology advances that will lower production costs. So they're saying that they view a significant opportunity in gold mining. And again, this is a fund that manages 100 billion, okay? More than 100 billion if I recall. In our opinion, mining shares remain episodically depressed. They offer superior leverage to anticipated future further rises in metal prices. As to timing, it has always been hard to say. What is certain is that during gold's 6 years in the penalty box, the underlying forces that have made the metal a superior strategic investment over centuries have not been idle. Once capital markets flows revive, there is real potential, in our opinion, for parabolic upside in the metal and the shares. Okay, that's it on the technical gold. Any questions on that? That was just some of my readings this week that I wanted to share with you guys. Well, it was really last week, but yeah. Looking over at Bitcoin, guys. For those of you who are new, I'm bullish on Bitcoin. Do you want to know why, or not really of interest? I mean, there are some financial pros out there getting bullish on Bitcoin, and it's like guys that I highly respect in the money management industry. But just to keep it simple, it's if the dollar keeps devaluing, this seems to be a nice alternative. So I'm going to play that. The only major risk for Bitcoin, again, is if the government declares it illegal to hold. That's the major risk. My technical analysis on Bitcoin this week at the on the daily chart, this is what I'm seeing. So it's forming an ascending triangle. For those of you who don't know, do you guys like technical analysis? You okay with that? So this is the ascending triangle right here. Typically, this is like a bearish one or continuation to the downside, but I anticipate it to be either this one or this one. So that's what I'm seeing with Bitcoin. I won't go too deep because that's not the interest of today's topic. Another view of Bitcoin over here for, just
Yeah,
for.
I saw that one.
Oh, you saw this one?
Yeah.
Like.
People, that exact picture suggesting it will dip back up or down, but roll the dice, it could go anywhere.
Yeah, so this is just, I don't teach you guys wave theory in here, so if you guys notice like this 1, 2, 3, 4, 5 move right here, it's part of a investment or trading theory called Elliott wave theory. The concept of it is that everything moves in 1, 2, 3 waves of 1, 2, 3, 4, 5, and then down a downward corrective wave, 3 waves of A, B, C. So if you want to learn this quick, I'm not going to get deep into it. If you want to learn it quick, just remember 1, 2, 3, 4, 5, A, B, C, right? So it'd be something like this. So 1, 2, 3, 4, 5, right? That's the initial move, the intention of the move, and then the corrective A, B, C, right? So people who analyze and trade the markets long enough, they started to see this recurring pattern or the way the psychological people traded together. So if you kind of understand that, I think it kind of helps. So what I'm seeing right here is that this it restarted the initial move right here. So 1, 2, 3, 4, 5 is what I'm projecting next. Right? Not accurate, but just another theory to kind of forecast prices. So that's that on Bitcoin. Let's jump over to gold and share with you guys my updates on it this week and how I feel about it. So did anyone get hurt in gold this week? Or feel the... Yeah? Well, my question to you is like, did you try to take some gains when you were up, or were you up at least? Yeah, you're up, right? So you got to kind of understand that things move in a rubber band in this world. For quite some time, it was really high sentiment and oversold. It'll correct, but in my opinion, the core position still remains, meaning that in the long term, gold will still go up just because of the economic situation. So if you ask for my analysis today, what am I seeing? So as always, we look at the daily chart right here. I don't know are you guys okay with my technical analysis today? Because I know there are some new people. I don't know if I have to get super basic on it, but let me know if you don't understand something. So I always like to look at the daily chart, and this is what I'm seeing for gold. Let me see if I might point it. So we've been in gold since November. It rallied right there, and then had a decline right here, and then it broke out right here, causing an uptrend right there. So that's what I'm really looking at. In its most simplest form, I'm just looking at this trend line right here. I anticipate gold to hold maybe right here. If it doesn't, then these would be my next area of potential support. So the next area would be this retracement right here, which would be 1475. If not, then it'd be 1450, and if not, it'd be lower to 1419. But that's what I'm looking at next. And right here, you have a broadening wedge. A broadening wedge is typically a bearish pattern, right? Because it gets broader and then it goes down. I think it's healthy for gold. I think gold will probably revisit the 50-day moving average. I know it's getting a little messy, but my 50-day moving average on here is this light blue line. So I think it'll revisit right here, which is also the 23.6 retracement right here. So that's what I'm anticipating on gold. So for those of you who are not in position, want to consider a position, that is my TA or technical analysis on where I think it'll go next. I think gold will remain in its uptrend. Just right now, it's just getting too popular, and so it's a healthy pullback in my opinion. That's gold on the daily. If you go to gold on the monthly, this is what I'm seeing. So as you start analyzing charts, right? I advise that everyone should start off on the daily chart, meaning each candle. If you guys don't know, each candle is 1 day, right? So for example, this is one candle. That's 1 day. The daily chart is basically the standard view of like every money manager out there. And then you would jump to the weekly chart and the monthly chart. You scale out to kind of get a better view on things. So this is the gold monthly chart. So as you can see, it says monthly right here. And this is what we're seeing. So we had a long 6-year rounded bottom and then a 6-year breakout to new highs right here, right? And that breakout was assisted with massive volume. So there's massive interest. Right? So I would argue that that's probably the initial move. Let's say 1, 2, 3, 4, 5. That might be the next anticipated move. Right? So again, I'm just applying some theory. And if you notice the blue, I'm drawing like a cup and handle right here. So if you guys know that pattern, the cup and handle typically looks like, it's just a cup and then you got a handle. So the stock would, go in and then it'll bounce around for some time. It'll make a rounded bottom. And then it'll go for one more attempt, but it'll go sideways like this, and then next thing you know, it goes higher, and breaking that new high. So that's probably the case. If we do start retracing, I anticipate to retrace back to 1400, but long term wise, that's the view, right? So I still remain bullish on gold, and I think there's a lot of money to be made if you are confident in trading it. Looking over at silver, what do I see in silver? Again, we'll start off with a daily chart for silver. Silver was the most aggressive and most overbought. So if you guys follow the chat, I sold out. I didn't sell out right here though. You never get the top. I think I sold out like right there, right? And so now it's retraced right here, right? 2 solid down days. I'm anticipating, a revisit back to this trend line at the $18 level, but I already added some positions right here, just because I know you can't time it perfectly. So my thinking is that I get back in here, it goes a little bit lower, but the trend will remain. Now, if the trend breaks, meaning this black trend line that I drew, if it breaks, then it'll go down lower to probably 1750, which I also don't mind, right? I'm primarily trading the silver, depending on my timing, right, on options contracts. I'm primarily trading the 2021 contracts. And that's where I'm getting leverage, and they're pretty cheap too. But yes, that's the analysis on silver. Any questions?
Do you do options? Or
Yeah.
stocks?
I do options.
You would buy a future option
Uh,
contract?
I would buy option contracts on the ETF's SLV, which is silver. Yeah. Now, I also trade gold miners, which is one of the ticker symbols that we trade in here is PAAS, P-A-A-S. So this is another one as well. So this one we've been watching for quite some time. This is supposedly strong management, one of the world-class silver mining companies out there. It is a little overbought, but if you know how to time the markets right and find a re-entry, here's a re-entry at the 20-day moving average. If not, re-entry at the 17. And then if not, then definitely I think the 16 is a nice re-entry. Because right now it's already trending up, right? I think the hardest part about for people in trading is actually to buy shares as they're going higher. Because most people want to buy low when it's the low, 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 low. But reality is I always buy high and sell higher. That's the reality. It's easier that way than buying low and trying to pick a bottom. Picking a bottom actually leads to a lower decline. So that's silver, guys. Zooming out on silver, this is what I'm seeing on silver. I drew like a long-term trend line on the monthly. It's hitting resistance at the $20 area. So anticipate some headwind if you're gonna, just play silver, right? And then looking over at platinum, everything's kind of cheap. This is the monthly on platinum. Support at 800, and then break up this trend line initially. We'll see. If it continues to hold and break out that trend line, I think platinum will move. Mainly for me, the main indicator for me to play platinum, some of you might disagree, is that if gold and silver continue to go up, then I'm going to continue to play platinum to the upside. So that's why I anticipate the platinum. Platinum is relatively cheap. You could play that with an ETF called PLTM. And that's it for the metals. Let's skip this one. Let's go into trade ideas. Okay, all right. So now we're going to get into today's topic, I guess.
How can we find the ETFs you suggest that are correlated to the...
Sure. So if you guys understand the markets long enough, you guys understand the stock market, right? But not a lot of people think that the stock market just only has stocks. But because of like the reality of that, the social reality of that, everyone thinks the stock market only has stocks. The financial engineers on the back end said that, they could trade futures, and so we'll just engineer packaged products and put it into the stock market so they could trade it, right? So if you want to trade gold, especially gold leverage, then you could trade something like a nugget. But that's more of an advanced instrument if you know how to play it.
Can you explain what that is?
So this is a ETN, exchange traded notes. So you understand ETFs, right?
ETFs, but I've never heard of an ETN.
Yeah, so there's stocks. Stocks is basically equity. You own ownership in a company. And then there's ETFs where, financial engineers will package it with like, a little bit of Apple, a little bit of Facebook, a little bit whatever, call it FANG, right? And then there's ETN. So that's an ETF. There's an ETN. ETN is exchange traded notes. So the other one is ETF, exchange traded funds. So funds is more of like a real asset. Notes is like an expiring contract, like an option. So these are packaged with options and futures contracts. So they are built to mimic the real move of gold, but at a leverage rate because they're using derivative contracts.
So it's like a pool of options?
It's a pool of options.
Oh, there you go, okay.
Okay, I guess that's a better way to say it.
So are there expiration dates on this?
No, so there's a professional money manager behind every ETN that's managing it, right? They'll roll it over to make it follow that ETF or that index.
I get it.
Right? So if you're going to play this, you have to understand that there's tracking error, meaning that no manager could perfectly track it. And so this is an example of tracking error. If you pull out to the monthly, you see that just by nature, this thing just declines, right? But this is this instrument itself is the hot instrument for, traders who know how to trade and play it when the markets are hot. So this is where I would say if you want to invest in gold, right, I would do GLD as a core position, and this is all for educational purposes only. GLD for your core position, and if you want leverage to go 100% in GLD as your core, and if you want to go 200, 300% position, then you trade Nugget.
So are there like Morningstar ratings on these funds?
I don't think so.
Well, who creates it? Like, where does it come from?
Yeah, it comes from so financial companies, right? Like Credit Suisse could create it. Direction is the creator of this one. So, for example, now this is where we're getting into the financial industry if you don't know already, right? So in finance, everyone knows like investment banking, commercial banking. You guys know the difference between that? You want me to go over this real quick as to like who creates this and why? These ETFs? Not really? Okay, so since they're conflicting, we'll go quick. So in the finance world, right? They have to make money somehow. And one way is, there's wealth management, there's investment banking, there's commercial lending, and so forth, right? This is just another segment of that, which is like derivative products. So if we invent a derivative product like Nugget, which is an ETN, and entice you to trade it, then we make some fees off of you, right? So for example, GBTC is the stock version of Bitcoin. So do you know how this works right here? So this is GBTC. What they do, they have their money manager. They actually go and buy real Bitcoin, securitize it, and then distribute the shares for you to buy it. But if you knew that, you could avoid the fees by just buying Bitcoin directly. But if you buy directly, now you have to face with you're faced with the wild west of the markets, right? It's still emerging. You don't know how to transact properly. So again, the stock market is extremely godly. It's extremely powerful if you know how to leverage it, because all the instruments are there. You could trade currencies in the stock market. You could trade derivatives in the stock market. You could trade like a certain vertical in the stock market, right? There's the ETF SKY, which is giving you exposure to just software stocks. Isn't that amazing? So the stock market itself is the coolest market in my opinion, because it touches every other market. And if you know how to maneuver it right, you could benefit well. So that's the little warning on Nugget right there. It's a decaying asset that's managed by a fund manager. Any questions? Okay. So let's get into the trade ideas. So if you guys don't know, this is actually content from last week. But if you really want to see the content from last week, I can pull that up as well.
Thank you.
Hey, see you, man. So mobile iron. I'm getting bullish on mobile iron. This is what I'm seeing on it. Do you guys want the explanation as to why I see it, or I'll give you the quick technicals? So this is the daily right here, and it's already breaking out to new highs at 650, and it's already above the $7. So that's how I kind of measure it next, all while holding the 50-day moving average. I anticipate this one to continue its trend line to the upside. Reason being is that they have strong VCs that are backing it. If you guys know, the book that I bring in is called Survival to Thrival. It's by a VC that I met. He gave me those free books. He's invested heavily in this position as well. So mobile iron is so the other transition is that if you guys know, there's enterprise software, right? There's now the whole trend of like mobile software or mobile enterprise. Do you guys notice that everyone in here has a mobile device? And I tell you guys like how powerful this instrument is. So in the future, everything's transitioning to mobile enterprise, meaning the way they do business is going to be on the phone, right? I see the mobile adoption increasing more than desktops now, or maybe even laptops. So this is the play on that. All chip stocks are ready to break out. Okay, what do you think? So X, I got to answer you that, or give you the answer later. Yeah. So for those of you who don't know, there's this thing's run online, offline. But anyways, going back to mobile iron, my trade idea is that I see this one breaking out, going higher. Any comment or further explanation as to why?
How about acquisition targets for them?
Acquisition targets potentially, because they're only worth $700 million. They're undervalued relative to the industry. If you know the price of sales of software right now in enterprise software, doing the sales that they're doing, this thing should trade at least 10 to 15x. So that means 5 times bigger than the price it is today. This thing should be trading at 35 if it were to be acquired. Now, if there is a lack of fiduciary duty among shareholders, and this gets acquired for $8, I question that. That sets you up for like a legal battle, because realistically in today's prices, this security is worth 5 times more. Yes, PLTM.
There's another one, PBLT too.
Yeah, so there's going to be several other ones, right?
What's the difference?
Different companies will issue different ETFs, right? Because everyone's chasing for fees. There's a business out there. You guys have to remember as well that if you're able to access the stock market, it's giving you convenience, right? And we pay for that convenience. But anyways, going back to the SaaS valuation. So I know if you look at it, it's like 20 times book value. Yeah, that's a little concerning, but the way I see the SaaS deals and how things are getting acquired is really running on price to sales right now. So from a mobile iron perspective, the charts look very bullish. Let's give you guys a very end-to-end analysis of mobile iron so that you kind of know how to look at it, okay? So starting again with the daily, it's already breaking out to new highs. Again, new highs are always good. I see that it's stuck in this range right here between 7 and 750. So that's a great way to consider a position, because if it revisits 650, you could fill there. Or if not, I like to just buy it right there. But I anticipate to go higher on the daily. right? And if you want to zoom out and see what does the bigger picture look like, again, the weekly looks very bullish and it's already setting up a flag. For those of you who don't know in trading, this is considered a bullish pattern. This is a, well, it's a bull flag or a bull pennant. Either way, depending on how you draw it. If I drew it this way, it'd be a bull flag. But that's it right there, right? So you see declining volume on the consolidation. This tells me that this security wants up on the weekly. And the weekly is a lot more confirming than on the daily. And if we zoom out even more, it looks very bullish because it's breaking into new multi-year high. What do I mean by multi-year high? Back in 2016 until now. So this is a new high right here, right? And this is assisted with up volume. So this is telling me the direction that it wants to go up. Now, if we go over into Crunchbase and look up Mobile Iron and see who were the venture capitalists that participated in this, because I leveraged that insight as well to kind of gauge to see how big or how far the security could go next. And then we'll look at the public shareholders as well. If you look at the venture capitalists, we see Sequoia Capital and Storm Ventures. So I kind of just know already. For those of you who don't know, Sequoia Capital is the #1 venture capital company in the world, firm in the world. They're located here in Sand Hill Road. So if they have a position in this about 11 million, it seems, then they anticipate a lot more upside. So that's the analysis on the private markets. If you want the analysis on the public side, seeing who are the existing shareholders, so we could jump into that as well. So is it Morris? I forget. Yeah. Morris, right? So this is the day where we're going deeper into the stock analysis. And I try to communicate in a way where we keep it simple. I'm trying to keep it simple, but just trying to help you guys see that there's a form of analyzing the charts, and then a form of analyzing the fundamental numbers, and then a form of analyzing the private venture capital investors, and then a form of analyzing the public market holders. So right now we're looking at the public market holders. I want to see who's holding it on the inside, and are they increasing position or decreasing position. So if you go in here, I can see the different names in there. But we're going to be doing this a lot today, so I won't be looking at Mobile Iron too specifically because we looked at it in the past. So these are the direct holders, and then down here is the top fund holders. We're going to do this for the other exciting securities. But that's Mobile Iron right there. I anticipate higher prices, and again, this is just for educational purposes only. I believe that it's a undervalued SaaS play. It's undervalued because it's only trading at 3.8 price to sales versus something like, SAP's willingness to acquire Qualtrics for 15x. So this is traded at 3.8.
But it's been at, fairly low for quite a while. So, what's causing excitement now?
I think the market recognition for one, sales are growing, sales revenue, sales growth, if I recall. So we're not going to look at the earnings on this one, but if you wanted to look at earnings, right? So you could put in the ticker and you go to investor relations, and then we dive deep into the presentation and look at what were the quarterly results and all that. So this is how you perform fundamental analysis, right? Because just now, I'm showing you end-to-end analysis. Just now we were looking at price charts, so that's technical analysis, and we flip from the daily and then zoom out to the monthly, right? And you're asking me what is causing it to go up today? Well, technicals will only communicate to you that prices want to go up. Now we have to go figure out why, right? We want to look at the sales. Are sales growing? So sales are trending higher, and they're getting more profitable. So EPS is earnings, right? What you take home. So they're getting less. They're getting more profitable because they're losing less money, right?
Okay.
So that's a good sign to see. But if you jump into their investor relations, you go and peek around. You could look at the recent investor Q1 presentation, and then we'll look at sales growth. So this is how you learn about an enterprise, right? Modern work is powered by all this, mobile and cloud. They're playing the mobile play. Mobile threats are pervasive. We're going to do a lot of this today, but I didn't want to focus on Mobile Iron, so I do apologize for going a little quick. But here's another way to look at it too. Mobile Iron is a Forrester industry leader. So if you understand enterprise software long enough, forms of analysis, there's the Gartner report, the Forrester report, Accenture reports, G2 Crowd, whatever reports, they show you where they stand. So what we see right here, Mobile Iron is ranked very high in the industry. Right? So this is another reinforcing opinion or analysis that I have on Mobile Iron to kind of develop that correct investment thesis. But product revenue shifting towards subscription. So their revenues are just going up in terms of cloud and everything else. On-prem is kind of sideways. Maintenance, 30%. So yeah, that's all I want to look at for this one. So that's mobile iron, guys. I'm gonna go kind of quick, okay? Because these are just trade ideas. That one has upside. Looking at BlackBerry. So BlackBerry, I filled the position this week. I filled on this day right here. So BlackBerry, you guys already know, we looked at it several weeks back around this time right here, but it didn't do so well, as you can see. So I exited the position, but now I'm looking back at it again because I see a double bottom right here. For those of you who don't know the investment thesis for BlackBerry, I'll repeat. I always start with 80-20. So BlackBerry historically was 80% hardware, 20% software. But John Chen, the guy who flipped Sybase over the SAP profitably, so he's an expert now, right? He's now behind this company, and he turned it from 80-20 hardware software to now 80% software. So they have thicker gross margins. So if you want to see their margins, we could jump over here and then look at their financials in real time. So for those of you who don't, you guys understand margins? Margins is basically what you take home, right? So if I go over to, so this is BlackBerry, and I go to interactive charts. John Chen took position in the company in 2013, if I recall, right? And if I pull up gross margins right here, since 2013 he came in. So this is the gross margin line right here. So when they started, they were 30% gross margins. Today they're at 70. I'm going to draw on it because I think it helps you guys better. So this is the fundamental analysis, right? What I have right here is the price of the stock, which is $7, right? And he joined in 2013, right here. So in 2013, the margins were going down. Business was expensive and doing bad, right? But they managed to reverse margins aggressively in just 2 years. In 2 years, he brought it to, 50% gross margins. And then 5 years later or 6 years later, it's now at 70% gross margins. So now it's true enterprise software, cybersecurity. If you know what they acquired recently, so in his call he talked about the 3 C's, Carbon Black, which got acquired, damn it. Right, that was my favorite. Carbon Black, CrowdStrike, and Silence. Silence is under BlackBerry today. Right? So those are the only 3 in cybersecurity AI. So it's an AI play. So this company is completely flipped, but the market hasn't recognized it, right? Now, the other thing I stress the importance is that not a lot of people think about this, but if you actually go out there and do sales, because I know you're in enterprise software sales, right, Morris? If you understand relationships, right? Who is BlackBerry's relationship? The government, right? They used to sell phones to the government. So it's very easy to call them again and say, hey, we used to sell you hardware phones. Now we do cybersecurity AI software. Very easy to pick up that relationship back. So sales friction-wise, I think is significantly removed compared to like, hey, we're Carbon Black and we're trying to sell to the government. They'd be like, who's Carbon Black? Right? So I think by nature already, BlackBerry has already won the government B2G, business to government segment, right? If you guys understand business long enough, Facebook, Yelp, and all that is B2C. Apple's B2C, business selling to consumers. B2B would be like Salesforce and Oracle, selling to other businesses, business to business. And then B2G is business to governments. So I think BlackBerry has a monopoly in terms of selling business to governments. So I like that. The market has not identified, so the stock's been going sideways for a very long time, yet it's becoming very efficient. So I like those signals. The main one I really like, we're not supposed to get deep into BlackBerry, but I wanted to show you this last part right here. The main reason why I really like BlackBerry, I mean, those are all really good reasons, but a really powerful one is this guy named Prem Watsa. He's a Canadian billionaire. He's worth more than 1.77 billion, but this is his live portfolio right here. And as you can see, 20% of his 1.77 billion of net worth is in BlackBerry, right? And he brought on John Chen. So this is world-class management. Companies becoming more efficient. The markets have not recognized its potential. Selling into an install base called the government, right? And penetrating AI cybersecurity. And we already know this market's hot because CrowdStrike's doing well, and Carbon Black got bought out by VMware. So this is how I developed an investment thesis, right? The only thing remaining now is that now I've confirmed in my head that it's bullish. The only thing that remains is that, okay, how do I play it? So now we have to go to the charts and take a look at the charts and see what we get. So, yeah, for those of you who weren't, I think you guys were expecting, let me know if it's too technical. I try my best to explain it. But this is the technical setup on BlackBerry. So I took a chance here because I saw some activity. If it doesn't hold, then just simply exit your position, right? Because this is your risk and then potential reward. But the reward, I would argue, is a lot higher for the long run. So I filled the position there. long dated calls. Looking at the bigger chart, it looks very bad, right? But you have to kind of discount it and think of it as a different company, because this is a distressed turnaround. This is like a flipped home opportunity, and it's already efficient, but no one's recognized it yet, and they're performing because they became more profitable, right? EPS went positive. They became profitable in 2018. In today's world, what software company out there trading at 4x and profitable? People are acquiring software companies with no earnings, so unprofitable at 15x. This one is profitable with a extremely powerful investment thesis, but no one's recognizing it yet. So that's the hardest part about being an investor, right? You identify the investment opportunity, but how do you play it? How do you fight? It's really a battle of your own emotions. So,
So how would you file an option on that?
How would I buy an option, or?
No, would you take a weekly, a monthly, 3 month?
No, I would buy they have 2021 contracts. You could buy those 2 years out. If you want low management, right? The closer your expiration date for option, the more you have to manage it. But I'm just keeping it for simplicity's sake that I just do the bigger directional, the bigger contract time frame. It's relatively cheap. I think it was only $150 a contract. $150 to get 100 shares. 100 shares would be $700.
And how do you, I guess you put some exit strategies like?
My exit strategy is to sell if it starts breaking on the 7 and start going lower. But I anticipate, in today's market, at price to book of 1.5. I'm sorry.
No, I'm saying I wouldn't touch this.
Oh, you won't touch it?
Sales are just weakening every year.
Yeah.
I only buy stocks that are strengthening, not weakening.
Yeah, so that's the next thing we want to see, right? So sales to start strengthening, because I think that's what the markets want to see. But until then, that's my trade idea on that one. Let's move on to the next one. Twitter. Twitter, we already talked about. This one's B2C, it's not B2B. So if you want to see the technicals right here, Twitter is setting up multiple cup and handles. We're going to do the analysis of the charts and then look deeper into the fundamentals. So this is Twitter. As you can see, we're looking back in May when it had earnings, right? So earnings gapped up on high volume, and typically that's a sign of a direction moving to the upside, right? But what happened next was that it kind of peaked out right here, hit resistance, and retraced a bit. Retraced all the way to the low, as you can see right here, right? And that low became support. So this setup, if some of you don't know, it's a cup and handle, right? And then we'll draw some steam on top. Right? Yeah, really. So now it's just setting up to go higher. So Twitter is typically stocks that keep going higher stocks that are at all-time highs will go even higher. It's not all-time highs, but it's all-time highs relatively to however many years back. So let's zoom out, take a look, and you start to see the cup and handle a lot more clearly when we look at this type of chart. So now we're looking at the weekly, right? It's all zoomed out. You see this rounded bottom? Rounded bottom is a sign of support that someone is buying, right? When you look at charts, you're trying to identify who's accumulating at this price level average of 30. So that's the rounded bottom, right? And this was $40 was the resistance, and then this is the handle right here, where it finally broke the handle, and now went to new highs. So I think Twitter could go a lot higher right now.
Yeah, absolutely.
Yeah. The concept on that is that they are a relatively okay price B2C software company, trading about 10 times price to sales. They are profitable. They're low in debt. Sales is growing in the billions, and the biggest sponsor is Trump. Right?
If you're just put side by side, this is showing every positive attribute that BlackBerry isn't.
Yeah.
Increasing sales, increasing profitability, phenomenal acceptance. That's a winner overall.
So BlackBerry isn't so much increasing sales, but they made themselves efficient. It's more of an efficient organization that's by industry standards today. Now the only thing is to tap back into its install base. So this is where, as an investor, I myself am forecasting that they have easy access to that government entity deal flow, and they'll be able to ramp sales because they're already efficient. They just need to hire a world-class sales team to bring up sales, and every unit of sales they bring in this market will create tons of value. Right? Because if you know that SaaS valuations are trading at 10x, if you bring in a $5 million deal for a company, you get like a 9% commission for the company, right? From the company, and the company made $5 million, but equity holders actually made $50 million if they ever decide to sell,
software, it's hardware, but it's now 80% software and gain people's trust so that they can actually buy the stock. If the EPS is actually, it went up, but it's lower than the previous year.
Well, I guess the only thing I could tell you now is that when the numbers show, it's too late. It's typically too late. Right? The market's kind of, this is where you have to, like, I kind of see the trajectory, right? You just kind of have to, it's the most lonely part about investing. When everyone else is.
It's also the difference between what a technical analysis is versus a fundamental analysis.
Yeah.
Right? Fundamental, you're saying, where do I think this is going?
Yeah.
Technical is saying the market sees it going up.
Yeah.
Well, if it's already being seen, you're too late. You're too late. Right?
Yeah.
Right.
Yeah. So I mean, I'm showing you the technical analysis where I see some bottoming potential for maybe a position trade, and then I'm looking at the fundamentals. I'm seeing the company's getting extremely more efficient. The sales aren't growing. Now, I would argue we didn't even really look at sales. So if we take a more zoom into the sales real quick, right? So we know gross margins are expanding. That means they're becoming very efficient. But if I were to look at revenue real quick and see what's going on and look at it down to quarterly, because we have to forget about the past, right? It's everything 2013 and beyond. So we'll look at the past 5 years and we'll do the quarterly. Let's do past 3 years. So the past 3 years, sales have been increasing since 2018, right? So again, this might be that inflection point, but not to a momentum that the markets will glorify the security just yet. So it might be a longer term hold. That's the anticipation that you have to understand. Let's finish up Yelp over here. So Yelp, technical analysis. I'm sorry, Twitter, what am I saying? So that's the technical analysis on Twitter. We zoomed out to the monthly right here. One could see maybe a bigger cup and handle, right? Maybe put the cup right there. So I anticipate this to go higher. It's looking pretty good. It's trading at 35 billion, and I think I'm using Twitter myself, just because I see the power of like the data, evolution and all that. People chasing. This is, to me, a data node. If you guys understand what I mean, is actually the next asset. That's like real estate. Like being infrastructurally known on the internet is becoming the next asset. In other words, the whole influencer concept. You guys, at this point, you guys understand what an influencer is, right? Someone who kind of gained YouTube and got everyone to subscribe to them, and so they're like a node in the system. Now, what a lot of people don't know is that actually in China, there's actually influencer incubators, right? Just like here, we have startup incubators where we incubate the startup so that we take a position by owning the shares of the startup, and then we'll incubate it so that it'll grow in value and we make money, right? Well, in China, they have that business model where they bring on the influencer, teach the girl or guy how to talk on the camera, give them all the video stuff, and they start building up their followers, but they have to share their profits, or their profits are owned, partial profits are owned by the equity holder that incubated them.
So
See, so the world is really evolving if you see it, though. That's the crazy part. Yeah.
So if I can just give some people some advice, I'm probably the oldest person in the room here. We'll say. So if you
We
you
are.
if you try to become rich overnight, you're probably
can't.
going to fail.
You can't.
Okay. So wouldn't you like to be able to go to your country club and say, my company's sales are growing at 50%, and
Yeah.
my company's making a freaking huge amount of money.
Yeah.
So the two companies you showed of Mobile Iron and Twitter, if you load up your portfolio with 20 of those, not just those two,
Yeah.
but 20 strong companies getting stronger,
Yeah.
even if you guess wrong on 2 of them, you're still got 18 of them that are growing stronger and stronger.
Yeah.
And you're not going to get 100% gain
Yeah,
in a year,
yeah.
but you might get 25% gain, which is spectacular.
Agreed.
So I mean, if you,
So-
for people in this room, I hope people are kind of
Yeah.
taking advantage of what you're showing.
Yeah.
Are really insight to companies that are strong getting stronger.
Yeah.
And you are betting. There's no sure thing on anything.
Yep.
But if you load up on 20 of these, spread your money over 20, you will outperform the market over time.
Agreed.
You won't become a billionaire, but you'll still do
That'd be
better.
nice too. Yeah.
No, but I mean, you'll do better than the money manager will say you get 7%, you'll get 20%.
Okay. So
three times.
hold that what you just said right there. The money manager, right? So
Right.
a lot of you guys don't know this, but the B2C section. So I used to work at Morgan Stanley, right? And that role was more sales and fundraising. What a lot of people don't see today is that there's 2 type of money or finance profile in the money management industry, right? One is the fundraiser, who's a salesperson,
Right.
and one is an actual true money manager, right? And this is how the business works. This is how you make money. Because you charge a fee on assets under management, meaning how much money you bring in, you charge a fee, right?
Right.
So if I bring in 100 million, charge 2%, I make 2 million a year. So I could be focusing on fundraising and just bring in 100 million, 200 million, and my fees are fixed at 2%. So I have a solid business model, right? That's called a wealth management or wealth manager basically. On the other side, you have the money manager who gets paid a fee and performance. It's a hedge fund manager, right? So I don't think a lot of people see the difference these days. There's people who geek out to investments, like I would say us. Like I really like investments because if I wanted to fundraise, I'd probably fundraise by now, right? I mean, it's been like 2 years. I probably like raised some funds already, but I'm not. So that's the industry out there. A little bit of the industry.
Now, what I'm sort of saying though is there's a little bit of luck in all investing, right?
Yeah.
If you bought Target, who would have known Target would grow at 20%
Yeah.
because of the results? I mean, it's just true luck. But I mean, you've covered some fascinating stocks. You've covered, Mobile Iron and Twitter today.
Well, we're not even close by. This
But
is
you
just the
also
trade
covered-
ideas. We got even more interesting
Yeah,
ones.
but you also covered Carbon Black and Cloudera and others that are growing like at 50. So, if you
So we're gonna
at
look at
20,
that.
You
Okay.
got two rock stars and
Yeah.
maybe you got two dogs, but you're still growing at 20%.
Yeah.
I mean, it's I'm hoping
So
people can learn from
okay,
it.
I'm gonna skip ahead right here because those are the stocks that we're gonna talk about next. Those are the more exciting ones. These are just some trade ideas that I have, right? So I'm gonna breeze through this trade idea real quick. Activision. Activision is coming out of a long breakout. So this is just a technical analysis trade, right? For those of you who want to kind of get more familiar with it. But so this is Activision. This is what it looks like. If you pull up the weekly, you see that again. Whenever you see this sort of rounding bottom, like that, you could tell that someone's very interested over time.
Right.
And now it's just going higher. So that's a nice move if you consider like even getting at 50 to 55 with potential to retrace maybe 50% to like 65 or something.
Absolutely.
So those are potential trade idea moves. But I'm going to go a little quick because I want to show you the really awesome securities. EA, same thing. I won't repeat this one. This is what it looks like. This is the range that Electronic Arts has been stuck in. But it seems like there's a lot of interest over here with the volume right here. And then Uber. So for those of you who invest in Uber, it is a sovereign play. It's backed by Saudi money that's front-run by SoftBank, if you think about it. I think Uber is a strong play, but the fundamentals don't look good at all. There's nothing. It's not profitable. The margins aren't that impressive, and they're increasingly losing profitability, which is very negative. But and the markets are finally recognizing it. Now, I'm bullish. Not now, not at all right now. I'm bearish right now, but long run, I'm bullish, and I can see this going to above $60 for the reason of the whole data play. It's not this is where I say that as a financial investor, you have to evolve because the trading investing landscape has changed completely with technology, right? Technology is evolving our way of life. Again, we step into strangers' cars today, something we wouldn't do like 30 years ago, whatever, except stranger food from DoorDash. So the thinking here is that the world's moving towards more of a data play, and if Uber keeps declining, I think it's going to set up a great trading or investment opportunity for the longer run because I think they kind of they monopolize that on-demand ecosystem already. Because if you think about when you need a ride today, who are the two providers? There's only Uber and Lyft. So if it's already infrastructurally in your mind, right? Think of me using the EnterpriseGuy to get into the infrastructure minds of all the engineers out there. This is the same way. They got it at global scale. So if everyone knows Uber already, they're going to continue to use Uber, even though it's not profitable. But the data and the usage is where I feel like the money will come. But in a global macro situation, it's going to knock the security down. So I'm actually quite glad that this is getting knocked down. How much lower can we guess? It's pretty cheap already for something at this level. 25. If it could go to 25, I'll consider some. Because there's some serious holders of Uber out there, right? If I pull up Uber over here and just take a look at who's holding a position. Sorry, I'm going to mute somebody real quick. You look at who's holding a position in Uber from a fund manager perspective. Let's see who's the most high conviction and how much money they have invested into Uber. Just one example, and then we'll move on to the next. Because today's more of a securities day, okay, guys? It's not so much of a global macro discussion. We'll go to plus, and we'll look at the Total percentage. Let's see. Who has the most conviction? Glade Brook Capital Partners, right? They have 57% of their portfolio in Uber.
Incredible.
That's ridiculous, right? But they're only, let's see, what are they? Yeah, so, they, wow. So it's only Uber and Lyft, and they're holding 7 million shares, right? And this portfolio is about 600 million.
SoftBank is a big investor in this one.
So is it yeah, they are.
Yeah, pre-IPO actually.
Like I said, if Uber goes down, this is, you're messing with Saudis right now, right? Saudis' money. Saudis.
Can you explain that last one said new holdings? Does that mean they just bought in? They didn't miss out like in the decline?
Yeah, it could be. So I don't know the exact timing on this. I need to double check that. But yeah, it is a new. Yeah, Uber is a new holding, so they are looking to buy. So this is a $600 million fund, which is relatively small, but they have high conviction with 57%. You see what I mean? So the charts will never be ready for you, or actually, you'll never be ready for the charts. But when it looks like this, how do you respond? So this is me. I'm looking at Uber, but I'm looking at it knowing that what's the potential here, right? Because they already monopolized the market. Can anyone in here disagree that they're not a monopoly or oligopoly with Lyft, Uber and Lyft? Is anyone out there that's better? Not really, right? So
And there aren't many choices either.
yeah,
So.
and if you guys remember what I tell you guys, like the only time K would pursue a low margin business, 2% profit margin. The only time I would do that is if I have a monopoly, right?
But what happens when the autonomous industry picks up, right? Like
autonomous?
Yeah, like.
So if you we didn't get a chance to go into this, but
Long time away from that.
yeah,
Don't worry about
Yeah.
And Uber's a major benefactor of that anyway.
Uber's developing their own.
Uber,
But they are way behind in the market as of now, right?
yeah. So when we think about enterprise software, it's mainly for enterprises, right? This is consumer software. It's our way of life, and I perceive seeing how Generation Z, their first mobile device was a phone ever. They're going to be pretty adapted to this. Like this is how they perceive their reality, right? Because I was talking to a guy this week, and he was like, I know this guy, and you should meet him. I'm like, oh, how'd you meet him? I met him like 20 years ago, and I was thinking like, dude, like in a moment in my head, like, what did 20 years ago look like for me? I can't even remember. So sorry, we digressed a little bit, but just it's so different, okay? Like I talked to him about the difference between the way of life back then. His life had a lot more friction where he had to go to the library, print stuff, and it's very manual versus today. Younger kids or the newer generation could get their consumption needs with a touch of a screen, right? Buy the food, go date, watch a movie, whatever. A lot of consumer needs are getting hit, so you become mature quicker maybe, but I don't know about the ability to put in sweat equity. I don't know how hard the next generation
So
is
just
working.
one thing their CFO said, by the way, is that don't think of Uber as a taxi alternative. Think of it as a human labor delivery service.
Yeah. So I wanted to add that. So if you know the CEO, right? He's not CEO anymore, but he's more of a shareholder now. He actually had it was an article talking about how he was talking about world domination. So Uber is only like any other software. You land and expand, right? You say, okay, we'll come in as a Workday, HCM, human capital management software, but then we're going to sell financial software after that. It's land and expand, right? So Uber and Lyft is a land and expansion of the human race, in my opinion. They're landing on us by getting us to all use it. Now we all know Uber. We talk about it in our music videos and all that. It's becoming infrastructure in our language. The next step is to see what else can we Uberize.
Absolutely. Absolutely.
Right? So you see like the Lime bikes and stuff. Now that I see it, these VCs are investing in the Lime because they want to gain that infrastructure so that Uber will buy them out.
Absolutely.
They're already thinking about an exit strategy more so than like a real profitable business model, right? But it's all for the purpose of data collection. Because in this next era that we're moving into, in my opinion, from what all the engineers I meet in here, it's a data race. Data is greater than money. I honestly believe that. But there's one thing that will never beat money or data. Should I tell you guys? Or it's my opinion. It's social capital. Social capital is extremely real because behind every data that's inputted into a system is a human being, right? And I tell people this all the time, like focus on building your network, because if you want to thrive in your business, everyone wants cash flow. What they don't understand, cash flow comes from deal flow, and deal flow comes from people flow. So at the end of the day, everything's people. That's like the answer right there. It's a slap to the face. I wish I saw it sooner. Yeah. So because of, the market's taught me that value system, that's how I kind of incorporate my daily life. So let's move along here, because we got a lot of stocks that are pretty nice that I want to look at. So that's Uber right there. Seeing some big funds having high conviction, satisfying a position at around $30, 50% of their portfolio. Lyft is about the same. So when I think about these two, it's really just one stock. I prefer Lyft more because there's a lot more upside. Because if you look at Uber is 55 billion in market cap, right? So for it to go to 100, for Uber to go to 100 billion, then it'll be $60, right? But for Lyft, let's say Lyft goes to the size of Uber today, which is about four or five times, so 4 times, so this would go to $200. If Lyft were to go to the size of Uber, it'd be $200, right? So Lyft is more leverage, so that's why I like Lyft better. I'd rather do options on something that's more leverage to give me more bang for my buck. Uber will only go as high as, let's say, 60. This one could go to 200, right? So that's why I like Lyft. But the sales are significantly less. Uber has 11 billion. Now this is, uncharted territory. We never seen this type of, business battle or business warfare, digital warfare. I don't know how it'll play out, because it's like how the world operates on iOS or Macs and Windows. This is like the new classic mobile version of that. This is literally it right there. This is not even, I wouldn't even think of this as a ride sharing service. I would think this as the next mobile OS. It's a mobile operating system of how we operate as human beings.
Absolutely.
It's not ride sharing. It's not Uber Eats. It's the way of how we operate. And if they dominate it big enough, right? If everyone's on Uber, can we introduce enterprise mobile software to them? You can build on top of the platform, right? It's like every SaaS model. You focus on one segment, you win that segment, you branch out, and you just keep benefiting from the data collection. So this isn't that kind of interesting?
So, Kate,
this could be an operating
investment
system
strategy for this year. Let's say Lyft's at 44.
Sure.
What, you think it's going to go to 80, let's say. Well, why don't you just wait until it improves to like 50? Even though you didn't get it at the absolute bottom, why don't you just wait for a sure of an improvement?
Yeah.
Is that what
Yeah, that's exactly what I do. So I took a position right here at 50. I took a position at 47.50 or 48.50, and it broke that 47, and I stopped out. So that was my position somewhere here. It stopped out because it went lower. So I only lost a little bit of money, but it's on my radar because I know that this is the annoying part about investing, is that everyone knows this is getting cheaper, right? And I'm not the guy with the deep pockets or the fund manager. So what would happen next is that maybe the next earnings come around or some news happens, it opens up and it starts right here. And then it's like this whole part got capitalized. Right? So that's why I'm looking at it now. This is just from my own experience and intuition. Sometimes you just have to fill a position. Now, 2 years out, I don't see any problem that this is going to be the mobile Windows or the mobile Mac for our mobility needs. Mobility is becoming a real investment opportunity. I'm just not a VC that's penetrating that market hard enough. So mobile iron, which is mobile security, right? I always tell people that you can really determine the way of life by just looking at a stock screener like this, right? So this is the portal to all the stocks in the USA markets. If you see that Microsoft's number 1, Apple's number 2, Amazon's number 3, Google number 4, Facebook, right? I can tell you guys this right now. Does everyone use a Windows laptop or Windows Office in the world? Yes. Does everyone have a mobile device called an Apple phone or Android phone? Yes. Yeah. Does everyone shop on Amazon these days? Yes. Do they watch movies on there too? Yes. Does everyone use Google search engine these days, right? So is everyone on Facebook social media? So a great way is just to look at the top 10 biggest companies in the world, or even 20, and it tells you a lot about what we want to consume on a daily basis. Absolutely. So I grew up with that fundamental question in my mind, right? Because I wanted to learn more about the world and understand what people do every day. And now it's like it led me to financial markets, and I kind of know what they do every day. It's basically watching Netflix, searching something on Google, right? And using your Apple phone and
buying with Visa.
Buying with Visa, banking with Chase, whatever, man. So This is why this portal right here is just so deeply fascinating to me, and this is a game that I'm glad I found early on, and I'm not going to step away for life. This is me for life. Look, in your lifetime, you will be a worker, you'll be a business owner, but in between, you're always going to be an investor of your money, investor of your time, investing into relationships. You're always an investor.
Yes.
So why not start now, right? Why not start the thinking now? Looking at Beyond over here. So Beyond's the short position I have. If you guys recall last week, it was like right here, and last week the trade idea was to, I think it would go down. So this one I'm bearish on, but I won't go into detail.
Is that Beyond Trust?
No, Beyond Meat. Beyond Meat.
Alternative.
Yeah. I won't go into the bearish investment thesis on that because we have to go to the nicer securities there. So I'll skip Splunk and THM, which I did last week as well. THM is a microcap gold miner company that has significant shareholder by Paulson & Co. So Paulson & Co. is a big-time hedge fund money manager. He has a 32% position in that, which is very attractive, but I can't talk about today with the time that I
Can
have.
I go back to Splunk, sorry? Last week I forgot everything.
Sure. Oh, you want me to talk about Splunk real quick?
Yeah, what was it?
So Splunk is it's software, it's B2B software. You kind of really have to understand this market opportunity. Does anyone here work at Splunk or know Splunk? You work at DataStax, so you compete with Splunk, right? So I'm trying to remember. So it's on par with Elastic. There aren't that many players in the space. It's relatively small in market cap. What's your question out of it, like the potential upside here?
Yeah.
Now, remember when I used to work at Morgan Stanley, right? There was an old man that would come in and say like, I like to bike around and whatever commercial real estate property looks really nice, I figure out what company and buy their stock. And apparently his portfolio did really well. So Splunk is located in Santana Row, right? So they have a strong presence here in I'd say, the heart of the consumer economy in Silicon Valley. I think there's substantial upside. Valuation-wise, it's okay, not bad, 8 times. Price to book is pretty high. I love the sales growth. So this is like Bernard's, specialty right here. 42%. Let's see, what's the quarterly? So the quarter over quarter is 56%. So I like the growth, but the markets are not pricing in the growth right now. Reason being is because of recent volatility. There's been a lot of volatility in the markets, and so you see securities like Splunk and Salesforce, which is the person or the people in the biggest tower, tallest tower in San Francisco. As you can see, the markets overall have been very harsh on high growth securities like this. So it's just been hard to trade these. So I've been allocating away and playing more gold miners just because of the macro situation. So that's Splunk for you. I like it. I think it's a Gartner leader as well. That's a great way to identify that. You want to look at the quick VCs who invested in Splunk. I'm sorry. I apologize for moving a little quick, but I want to maybe get this done by 12:30 if that's okay with you guys. Unless you guys want to leave anytime. Let's see. So August Capital Ignition Partner were the VCs that invested into Splunk. I like that. I also want to look at who are the big holders today, right? Because I don't focus so much on the retail traders who are trading Splunk. I want to see who the high conviction, serious money holding on to Splunk. So we look at today, highest percentage of total assets managed into Splunk is this fund called Senor Capital Management. Not even holding a significant share, but betting a big portion, 7% of their portfolio. Right. So what is the thesis and what's their investment style? I don't know who they are, but they're managing about 100 million, and they have a lot of a decent size in Splunk. But is it their biggest shares position? It's not. Okay. So yeah, I won't go into detail on this one, but I do want to check one last thing. Splunk, Gartner. Let's see.
Thanks a lot, man.
Hey, you're welcome, man. So I'm just going to pull up the nearest one. So 2018, Splunk is a leader, right? Carbon Black was the leader. You know what happened to that one, right? Rapid7's a leader. You know where that stock's kind of going. So Splunk's a powerful entity. There is another industry segment that you can analyze. I would recommend checking out DB Engines. I think Splunk is also up here somewhere, right here. So this is very esoteric, industry-specific knowledge. You have to have experience in this industry to kind of know, which I can tell you, your shirt says DataStax, so you know this very well. MongoDB is probably your worst nightmare, right? Yeah, so I'm bullish on MongoDB as well, which we're going to analyze today. So guys, I'm going to skip ahead here. I'll skip the uranium again, and I'll probably push it to next week. Splunk is the first company to move to Santana Row as well, yes. So this is the part where we jump into the earnings of some major software companies that I'm eyeing. I see some solid upside potential, but just a little reminder right here. This is a report by Battery Ventures. They are a top-tier VC firm. As you guys can see, this is a little, you know, why is Kay called the enterprise guy, and why does he like to invest in enterprise software? Today, the global software industry revenue is below 1 trillion, right? It's anticipated to go to 6 trillion. And I believe that because I see the changes in the economy, right? We were just talking about how Uber and Lyft is going to be like our mobile operating system, and then we go home and use like a Windows laptop or whatever. So software has a lot of upside, and to prove you guys that has a lot of upside, I'm just pulling up some charts again right here. So this is the SaaS performance, the SaaS index. If you were just pull software all out from the indices, so this is the Dow Jones over here, S&P 500, NASDAQ, all below 300%. Software does about 1,200% a year. So very powerful investment thesis. But what's going on with the individual securities? So I'm going to look at some earnings and just kind of see where things are going and share with you guys my insight. So first one we got Zoom. Zoom Communications, if you guys know. Bernard, you still looking at this one?
No, I follow it, but I'm surprised that their stock went down so much.
Yeah, I was actually surprised too. Now this is the going back to the BlackBerry where you kind of like grilled me on that one, saying like, hey, you know, there's no sales growth. Why would you consider that? This one has 100% sales revenue growth, but the markets are treating it very poorly.
Right.
How do we explain this as investment?
Well, so they're entering into a space that if you've ever heard of 8x8 or RingCentral or other cloud-based companies, they've sort of entered into that space about a year ago.
Yeah.
And those other companies have values of about 15 billion in total.
Yeah.
So that company could easily grab, let's say, a third of that value and become 5 billion higher in value.
True.
So I mean that has potential, and that is growing at a spectacular rate. So if you're in your portfolio, if you want to invest in a tech company that's sort of for the long run getting stronger, that's one of them.
Yeah. So let's start with the technicals right here. How I feel about the technicals. So we have a sort of a symmetrical triangle right here that's kind of forming. Area broken down right here. So that's giving me slight bearish indication, but also below the 200-day moving average. Now this is earnings. So you kind of have to give it some wiggle room. It might bounce back up. If it goes back into this pattern, I think it'll just play out like this. But for now, it's looking very bearish because it went down very high volume. So I anticipate what it would do next would be probably, there's two scenarios. One would be it bounce back up and kind of consolidate like this. If not, then it'll be like that. So it could get cheaper. This one's priced pretty high, so I'd be careful with Zoom. But it's something to pay attention to because I think they have a lot of influence, and if they partner with Slack, which gives them more like reach, that could be a powerful combination. But we'll continue to monitor because
and another factor is the lockup expiration is typically 6 months, so
that could be the case. Yeah, I mean valuations are so stretched already. This is like realistically, I mean I understand it's growing at 100% sales quarter over quarter, but like it's trading at 76 times sales.
So other companies are growing at about 25 to 30%.
Yeah.
So they're growing 3 times faster than 8x8 RingCentral that have market caps of about 15 billion, right?
Yeah.
So that's what you're betting on is can they maintain a 3 times level of growth of those companies?
Yeah. If you ask me and my instincts, this is the beauty of Zoom is actually it's a software company that's profitable, right? They actually have some profit because their PE is like really high. But the only issue is, look, this is where as an investor you can't really tell, right? But what I can tell you right now is I think prices will go lower, and that's probably all I could say. If you check the venture capital funding, who invested into Zoom Technologies, we're gonna know it's like world-class VCs, right? Because I know there's a lot of power players here in Silicon Valley that are just eyeing the security. If you look at it, Sequoia Capital, 115 million, so that's a big position. So they don't normally invest in companies that are only going to be 25 billion. Right. It's more realistically like 50 to 100 billion. So, but it's in such a short period of time. People are taking gains. Yeah. Right. So I think the massive insiders, stock options kicking in. Like, hey, it's up a lot. We made a lot of money. It's time to capitalize a little bit. So that's what I'm thinking. But this is a watch. That's my take on Zoom. Yeah. Let's look over at Palo Alto Network. So Palo Alto.
Since you mentioned Slack, do you have Slack here?
I have Slack on as well. Okay. Yeah, we'll look at Slack. So guys, it's 11:55. I do apologize once more. We're gonna probably end this at 12:30. You guys are welcome to leave, get a drink, use the restroom anytime you like. All right? Don't let me stop you. Palo Alto Networks. Now, this is a world-class corporation. I really like Palo Alto Networks. I think the recent earnings is indication that it's going to go even higher. I think initially the stock price went down, but it rallied back up. What I'm seeing next here.
I work for KW, and when do you think the stock prices will go up?
Do I think it'll go up? Yeah. So great. So maybe you could kind of, well, I can't ask you for insider information, but sure. Let me give you my end-to-end analysis on this real quick and how I feel about it. I am extremely bullish on Palo Alto Networks. Now, bullish, yes. Now, you're asking when. The more important question is when, right? This stock will go to 500. Yeah, you're really smiling. You're like, this stock will go to 500 because it's world class. They have substantial billion-dollar sales growth year over year, right? Something like a Zoom is only at 100 million in sales growth. This is $1 billion, right? I've met the VC. Thanks to Bonnie over there. We went to his house in Atherton, and it's one of his favorites as well. Unless I heard that on like an interview online, but Palo Alto Networks is a gold standard, and and since you work there, you probably already know that it's pretty sure it's a Gartner leader. Palo Alto Gartner. So let's see. I'm pretty sure it's a Checkpoint Palo Alto. Yep. So this is 2015 though. I want something a little bit more recent. So yeah, 2018 Palo Alto Networks, Gartner leader.
Right.
And a lot of people don't know in here, why do I look at this report? These reports cost thousands of dollars. You're probably looking at $100 worth of like content right here. That's on a Google search, right? But people don't know that. So I'm bullish. The technicals, I'll be short. I'll be brief on it. This one I have to play calls, right? Because it's $200. I think it's probably going to go higher from here. The economy, reason being is I think the governments are going to start printing money. If they're going to start printing money, then a lot of stocks are going to go up. That's just the game of it, right? Real estate prices will probably go up as well if they start printing money. Because this economy is just too robust and very hard to tell. I'm going to go light on the technicals. I'm going to jump into some of the news, right? So they had earnings. This is their earnings right here. 22% year over year to 800 million. That's the growth rate. So fiscal year revenue grows 28% year over year to 2.9 billion. So that's the earnings right there. So solid growth for a big entity like that. What is their business model? What do? Basically cybersecurity. Massive opportunity for cyber criminals in spaces like SaaS, cloud virtualization, IoT, mobility, and bring your own device. So this is really the software the market that they're in, protecting all this. And the question to really ask is SaaS trending up? Did you guys see this chart that I put earlier? Right? So if SaaS is trending up, right, and cloud virtualization is trending up, bring your own device. Did we talk about mobility? Uber and Lyft, that's trending up. And IoT, that's trending up as well, right? We're going to have smart lights that's going to be connected so that we could have full functionality and management from the mobile device. You're going to need a lot of security unless you want your lights flickering on and off middle of the night. Someone's hacking you, right? So I'm extremely bullish on that, and I know that it's funded by very, very high-tier, world-class VCs. I looked at some of their homes. They live in like the bougiest-looking mansions in Silicon Valley. Sure. Yeah. These guys, in my opinion, so the executives of your company and the investors are some of I would say the titans, the big players of Silicon Valley. So if you look at a venture capital funding, right? See like Greylock, Sequoia Capital. You just kind of know, and the trajectory of the security. I mean, even the VCs themselves don't know how much of a big hit or successful the company will be. It's actually when they release it to the market, right? And I've learned this firsthand when, thanks to Bonnie, I met the VC at his house. He doesn't know, he literally revealed to me a weakness. I wouldn't say a weakness, but an error that a lot of VCs identified. And it's usually too late. So what would happen was that they would be invested into the equity of the company when it's like less than $1 billion, right? And then it becomes a unicorn, and it becomes like $5 billion, and they're like, oh my God, I went to $5 billion, I gotta sell. 5 years later, it becomes 30 billion, right? So a lot of VCs can't even hold the position all the way themselves. And that's fascinating to me because the public markets allow you to get extremely wealthy, but it's more costly than the VC market. But the underlying issue between both markets, the private markets and the public markets, as money managers, it gets extremely hard to hold when you're up so much. You invested $1 billion, you're up $9 billion, and you don't take it because it could go up even more. but unless you know how to trade. Because if you knew how to trade, you could really...
I noticed that the PE ratio is basically 0, or is it not?
Yes, because they're not profitable yet, right? Yeah, this is a growth, yes, it's categorized as a growth momentum, sales momentum. It has some debt, they're accumulating some debt. Long run, I'm very bullish on this one. I think it could go to 500 very easily. Because the market opportunity it's servicing is very substantial. But right now, the conditions from a global perspective makes it hard for companies like this to go up. So that's the only thing. I'm not trying to advise you; it's all educational purposes only. But yeah, I wouldn't mind. I like the security a lot. Let's see. So I did have some highlights in here. So security in the digital age, right? Data-driven, automated cloud. This is from their investor reports themselves. So billings and revenue. So billing up 22%, revenue up 22%. There's a lot of growth there. It's substantial for that size. Continued strength of customer acquisition, right? As an investor into a business or even a business owner, something like an Arista Networks has very lumpy customers because let's say they have 100 million in sales, but 3 customers, AWS, Azure, and Google Cloud, give them 90 million. So very lumpy revenue, right? So that's why when I look at stocks, I like to make sure okay, you're increasing in customers, what's their average ARR or average contract size, and see if it's healthy. So this one looks very healthy. Gartner thinks so too. I think the VCs think so too. The charts look okay right now. It might be going sideways, but I don't perceive it going down further, as I think this is a Silicon Valley win, which is going to make real estate prices a lot more expensive, right? So a great way to think about it is think about where Palo Alto is located right now, and the homes around there will appreciate as that stock appreciates. That's a very realistic, real-time view of stock prices.
Absolutely.
So any home, Cupertino Homes next to Apple, right? You kind of see the reality of it. The logic is, if the corporation is right there and they're doing well, they're going to increase hiring, and if they have space, they're going to hire. If they don't have space, they'll tap into other pockets like Newark for Facebook, right? Facebook, from the grapevine I hear, or some people I know, they're tackling Newark right now. You guys know where Newark is?
Tackling what?
They're so you know where Facebook is?
Newark.
There's a bridge to Newark. Yeah, so that pocket's going to be probably gentrified if you look at it. So maps, Google. So this is how I kind of look at local real estate activity, right? I think about okay, where are you looking to buy or whatever, and how would this be affected a few years later? I think Pleasanton's going to be very powerful because of Workday. But so Facebook's right here, right? So if you know Facebook has a HQ right here, and you know that it's not a consumer issue, but it's a corporation's issue, right? Human capital, HR stuff. Like how do we keep them working for us to build us that wealth? Well, we have to house them somewhere, but the majority of housing costs very expensive. So what's the next alternative? So I'm hearing that they're eyeing this area right here.
What do you mean eyeing the area?
They're going to buy. They themselves are going to be the real estate buyer. They're going to buy at massive scale and renovate it, turn into like a factory of homes.
To their own employees.
Everybody.
They'll give first dibs because they're the owner, right?
Great insight. That makes sense.
Yeah. So this is why Silicon, like I said, guys, I've only realized like these networking mixers, like it's last week, okay. I forgot his name. The guy from Greylock, Silicon Valley, 4 million population, half of NASDAQ, right? Companies probably half of NASDAQ. Here in Silicon Valley. If I wanted to start any frontier startup AI company, it'd be here in Silicon Valley. All the infrastructure is here. All the human capital is here, right? All the tired executives that are at a publicly traded NASDAQ company are like, I want to make more money because it's expensive to live here. I'm going to quit, start a startup, and then give some equity. Those are some real ways to make some fast money here in Silicon Valley from a worker.
Wi-Fi shuttle between those two areas once a day. People would do it.
People are doing it.
Yeah.
This economy is burning up, and I see it as very recessionary proof because if you look at it from a bigger, I'm going to go back to the map. If you look at it from a bigger perspective, right? If you own Silicon Valley real estate, in my opinion, I'm not trying to be biased or provoke you to buy a home or whatever, but this is probably the objective reality of it, right? California is the powerhouse of or the engine of the U.S., right? So if you're thinking about it from just a human movement perspective. If people are in Chicago, and even myself, when I'm hearing the greatest minds that used to go to finance, they traveled over there. Well, I think that energy is coming here from multiple directions, everywhere from Seattle, right, to Oregon, right? But also the ones that are already here, don't think about the ones that live here. You think the other way. You're thinking like, okay, I'll retire in Wyoming, I'll retire in New Mexico, right? But the rest of the world, or the rest of the country, they actually think about coming in here. And the reason why I'm able to see that firsthand is because, 2 weeks ago I had a meeting with a Singaporean, right? This guy was in management consulting, made a lot of money, and he's like, hey, I'm looking to live here now, right? Another mixer I met someone from Saudi Arabia who runs a VC incubator, and he's looking to deploy capital, right? So the ones who are here wants to leave, but I'm seeing, more sophisticated players coming into the valley and having these conversations with them. So that tells me a lot. So if you know Silicon Valley, it's a software hub, right? And going back to the chart, you see where the direction of software, the bigger macro trend, it gives you kind of comfort in figuring out how to, for those who have real estate positions, you'd be okay. I don't think the decline will be that bad. But yeah, this is the trajectory for software. And Silicon Valley is getting exciting. I'm excited. I'm super excited to see how the way of life will change. And all this, quick access to technology of consumers, and how it's gonna force you to answer the biggest questions in life early on, because you're gonna get all your consumer needs out of the way sooner than the last person. You know what I mean? So sorry to digress a little bit, but let's see what else. While the threats get more sophisticated, so this is again from Palo Alto Networks, is just communicating that the cybersecurity threats or viruses or whatever is gonna get more sophisticated, right? What's the logic on that? Well, we're equipping hackers with more sophisticated technology. Not only are we giving consumers more sophisticated technology, but hackers too. So their hacking potential should be more exponential. Looking over here, what do they believe in? Security enterprise, which is very important. Secure the cloud, which is another thing to kind of think about now, the servers and all that. And then secure the future, right? That's the model. You're probably like, oh, I hear this every day. For those of you who don't understand, we're transitioning into a more software world. The trends in investing is very software oriented, I feel, or at least the high performance one. But these are the things that they're trying to protect these days. Data centers, cloud, which is more like software, the headquarters itself, the remote branches, right? Because they have to access the enterprise's servers and all that, and then mobile. These are serious segments. So this goes back to reinforcing Mobile Iron's position. You see how I could just read another investment report from another company just to kind of go and reinforce the mobility security of another stock, right? So this mobile user thing actually reinforces BlackBerry and Mobile Iron. So that's how I'm kind of front running the potential sales in BlackBerry. Again, I like because if our economy is going to evolve from a digital perspective, cybersecurity, AI, autonomous vehicle perspective, so will our governments need to evolve. Not so much the law, though. The law's a little outdated. I mean, that's my opinion, right? Because I mean, if I'm out of space over here, but if you look at technology, right? If you look at the legal system, the law is kind of like this, right? Meanwhile, you got technology, which is exponential, that went like this. So this difference here means like the laws that we operate on do not really take into consideration of what technology is doing today. How will Uber deal in a lawsuit if someone gets sued, but they're remotely responsible for it, right? Because it's the complete change in digital social infrastructure, legal infrastructure. It's fascinating, but
talking about law and Uber.
Yeah.
If he signs the bill, they will go down much more, maybe half of what they are today. So I wouldn't buy anything on Uber or Lyft until we get clarity on the
Sure.
passing
Sure.
fee.
Now the other direction could be substantially higher. That's how the markets work. Looking over here, so enterprise IoT. If you read BlackBerry investor reports as well as listen to the CEO, he talks a lot about EOT. You guys heard of IoT, right? Internet of Things, but there's enterprise of things. So enterprise of things is going to need enterprise security of things or whatever. So these are the devices that are increasingly being more connected as technology devices are getting cheaper and cheaper, right? I don't know if that's an Alexa device or
Nest.
Yeah, Nest.
Yeah.
I thought Nest was round, but yeah, mobile devices. You see how everything's getting very connected, right?
Sure.
It's good. Okay, so this new everything that gets connected, it changes the landscape, right? And because the legal system can't adopt it quick, it's going to leave like a ton of loopholes to make a lot of money for the person who knows how to see opportunity. We just have to figure out how to capitalize on it, right? And a great way to do it is probably to, go out to, if you run an incubator here like Y Combinator or Plug and Play, you get to see all these entrepreneurs who are like, hey, this is a solution. Hey, this is a solution for that. And you start to hear the ideas and you know the macro trend. You start investing into the equity, you can get paid out pretty quick. Like we're talking about like 100 million exit if you know how to bet right. Topics like Kubernetes and all that is getting pretty hot. Two-pronged strategy to secure the cloud. Securing everything that runs in the cloud, secure access to the cloud, right? Securing everything that's in the cloud, but you also have to secure your way of access to the cloud. This is why it's a robust investment thesis. It's 12:10. I'm going to skip ahead a little bit here. Let's see. No, I won't go into the technicals. CrowdStrike. I'm not going to look at the charts, but this is the 3 C's of the 3 C's, right? CrowdStrike, Carbon Black, and Silence. Silence is owned by BlackBerry. Carbon Black is now owned by VMware. It's trading at, what, $8 when $20 or whatever? It's supposed to go to $100. I'm serious. I thought so. And then the last one's CrowdStrike. CrowdStrike, Silence, Carbon Black. So this is the other one. So this is the one that's left for us to invest in, right? You can still buy BlackBerry, you can still buy VMware, but you're getting diluted, less leverage-focused returns, right? Because I would be able to get more leverage off Carbon Black than I would with VMware, because VMware is like $70 or whatever, but Carbon Black was at 15, 16. So they took away my leverage ability, but what do I know? I don't have as much money as them. MongoDB. So your question on MongoDB, I like this security. This one's holding up very well. This is showing me relative strength. Earlier we were talking about relative value. This is relative strength, meaning the stock market's been going sideways for a very long time, but this one's been holding higher pretty well in my opinion. And how do I identify holding higher? I see the gap right here in the initial earnings, right, on very high volume. And that support held all the way, so 120. Also the 200-day moving average right here. And it's been holding for a long time, still holding, and I think this one will actually go higher now. Now, conditions could get significantly bad. Of course, it'll pull everything down. But judging from this, MongoDB is a powerhouse of security from just the stiffness of its chart to its sales year over year. So up 240% year over year. I'm sorry, 67% year over year. 240 is something else. 67% year over year. Right? Zoom's at 100% year over year. This one's at 66%, but holding a lot better than Zoom. What else is bullish about it? I won't read this part, but some highlights. What is the play here? It's just the evolution of the database management software model. So it's like anything else. I guess to keep it simple, this one right here, 40-year-old databases like Oracle, the way it's structured is like rows and columns. This model right here is document-based. So the document-based, this type of database software tailors to the new applications of tomorrow that need more performance demands versus like the older databases, right? So that makes logical sense. And this is also an infrastructure play because every software you use, like Uber or Lyft, has that software in between, which is this, that will support that, right? So for example, they showed it pretty well right here. Every application you use, right? In this case, they're showing something else, that SAP the future of SAP will be Salesforce and Workday, right? Where ERP is just not needed anymore. And in Oracle, the future is MongoDB. BMC, the future is ServiceNow, and ServiceNow is a titan of a company. IBM, the future is AWS, right? But the other thing I would stress that, if you miss it, is that it's talking about the application layer. So this is like Uber, Yelp, Lyft, whatever. We'll always need a database to kind of, juggle the data, right? And then everything else is like, management and more infrastructure. So this market right here, the infrastructure market, AWS, Azure, Google Cloud, dominated. That's the triple oligopoly over there. So this part, I don't think I see many players. Well, DataStax is one.
I want to argue here.
Sure,
because
sure.
there are so many other big databases coming in the market, like BigQuery, that is backed up by Google, right?
Yeah.
DynamoDB, that is backed up by Amazon. Right?
Yeah,
Amazon is really pushing it
So if you want to be an industry analyst and focus on this specific segment, yes, the use case is significant. The question is, going back to social aggregate bias, right? And I say that because at the end of the day, you could have the better product, right? Let's say DynamoDB, Amazon's product, is the best in the market, but who's winning the sales? That's the reality, you know?
The way they are selling it as part of like Amazon Web Services, and that makes it really big thing compared to MongoDB, because for MongoDB you have to sell it independently.
Yeah.
There is no backup behind that, right?
I see what you mean. Yeah. So they'll move slower though.
Exactly.
In that sense. I like the fact that there's like someone in the NoSQL marketplace in the room now, because that's why I keep telling you guys this investment club is like a 10-20x to me, because the people I meet in here substantially increases my knowledge, because it's not I in my description of this investment club I say 1 + 1 = 3, but here in Silicon Valley realistically it's 1 + 1 = 10. There's a lot of synergistic value that when we talk, information bounces back and we learn a lot, but no one thinks about that. And this is just like, if we keep doing this, it's like years of like wisdom and knowledge of the valley, which is like kind of a leading powerhouse in the nation. Yeah, dude, it's a blast, man. Let's see, massive adoption of MongoDB. So this is just more charts talking about that. I won't go into details. I wanted to emphasize on the management right here. So this management team right here is literally world class. You got this guy, Dev. He's from Greylock, right? And he's like the guy running it. And he's holding quite a bit of shares as well. We could look at their position holdings, but if you look at the rest of the crowd, Sequoia Capital, general partner of Capital Partners. Hey, see you, man. Former AWS executive over here, 5-time public company Crow. This is a serious leadership team. And again, if you guys remember what I said, as much as you want cash flow, it comes from deal flow, which comes from people flow. Great investments always comes from great people. That's one thing I've learned from investing for a while now. Like, oh, John Chen's going to BlackBerry? Sorry, I'm like pushing back on you. But yeah, these people with a high hit rate, with a track record, with reputation, sometimes could just override all the other analysis for me. But for you to be confident enough to call that shot, say like, no, I don't believe in the bad fundamentals. I love the leadership. You have to keep practicing to gain that experience, to call against, to be a contrarian, to be confident to go against the crowd. That's my take on that. Moving over to the next security here, DocuSign. So DocuSign is looking good. I think this one's going to go higher. It gapped up on significant volume, holding the 55 right here. I think it's just starting. So DocuSign I like. I use it personally. You guys know what DocuSign is?
So the lift on news, what was the reason?
It's earnings.
Earnings?
Yeah, so we'll take a look at earnings right here. So this is the chart on it. I've been eyeing this one for a while. So you see what I mean? So this is the example going back to our BlackBerry conversation, right? You say, let's wait for sales to go up. And I'm looking right here, and you say, let's wait for sales to go up. Well, you'd be going right here.
Absolutely.
So that's why I'm kind of like, okay, I want to capitalize a little bit this move right here. I want to maybe see if I could bet this bounce. So that's the thing I don't like about the markets, where someone with much, much more money has so much more power than you at an unfair advantage, could just bet money like that and move the charts. Yeah. And you're like, oh, that was my thesis. So you really have to develop the thesis and kind of just front run the move somehow. So the reason for their growth, 41% year over year. That's the growth rate, 41%. Not 100% like Zoom, right? This is a strong use case example to answer like, why is Zoom at 100% not going up as much as DocuSign at 41%, right? And if we look real quick, just looking at the valuations, well, this one's only trading at a price of sales of 12, right? Versus Zoom trading at a price of sales of 76. Now I see why. This one is significantly overvalued, right? So any substantial 200% growth in sales, I'm scared, man, as an investor, as a savvy public market investor. The valuations don't look attractive to me. BlackBerry looks better, right? So that's I would say maybe that's the explanation on that. Moving over to the next part, I won't look at these numbers. We're going to be done real soon here, hopefully. Slack or work. I put some comments here. I feel a lot of eyes are on this one. Currently quite overvalued, and so this is still on watch for me, but long term I feel bullish. Again, because this is a classic B2B2C. It's convinced the hearts of the B2C, the consumers, meaning I see, maybe gaming groups or productive, nonprofit groups using Slack, like, hey, just Slack that. Then using it in their language, right? These are indications to me that when you use something in your language and you're using it because you think the other person knows it, then there is some bigger economic thing going on right here, right? Where this thing is hitting the world, and it truly is. So I see a lot of chop to the downside. I see buying pressure as well as selling pressure. Controlled buying, controlled selling. But this one is definitely on watch. I think last time we spoke about the valuations on this one, I think I said 25. It's getting near there. Yeah. It's getting close to that. So we'll see. I think for me to provoke a buy for me is for something like this to happen. I'll show you. So if I see this happen, then I'll consider a buy. Where it's downtrending like this, right? And then it suddenly spikes right here, and then it closes right there. I have to buy right there. Right. Unless if you buy it now, then you get hit with some downside because it's in downtrend. You don't want to play against the primary trend. Valuations are not as bad as Zoom. Zoom has too much of a high valuation, right? Trading at price to sales of 76. This one's half of that. No, I don't do put options on growth unless I'll do it on semiconductors. Because semiconductors are hardware, and their sales are they're fundamentally declining in sales. But software, this is 41% up in sales. It's kind of hard, man. I wouldn't do it on that. I'd do it on hardware and some business like Beyond. Beyond, I'll do put options because I'm just more confident about the situation of the business. So Slack, this one's 58% year-over-year sales growth. Some of the network, I won't read this to you. It's just the customers are growing, right, between paid customers and net ads. I won't read that part. So there's U.S. revenue and then international revenue. So I like that. This is truly global, right? Any VC that invests in a company that doesn't invest in a global company is out of their mind, because that's not really venture capital. That's just you spotting someone.
This is more of the enterprise software, right? So
it's B2B2C.
B2B2C.
So it's widely. I feel like it's widely adopted among enterprises, which is good.
Yeah.
They use the language internally, but when they go home, they're like, "Hey, I'll Slack you in the family grocery list channel." So I think that's a powerful combination. Hey, thanks for coming, you guys. Let's see. So Workday. How many more we have? So Workday is another one. This one's in decline, surprisingly. Hey, thanks. I don't know why, but this one's hitting below the 200-day moving average. It's looking pretty bearish, but I like Workday a lot. The primary trend is the primary long-term trend is getting challenged right now, but sales are growing at 32% year over year, and they're like the leader in this enterprise HCM marketplace. They also have financial management, which they bought out. They bought that exposure through Adaptive Insights. Mm-hmm. So, and these guys are also the high-powered people of Silicon Valley. These two right here. I forgot which company this one came from. If anyone knows, I think it was Siebel Systems or something. No, it's something else. But yeah, data plus engagement layer was the software about. It's financial management, human capital management, analytics and benchmarking and planning. Okay. For those of you who aren't in software, I know it might be a little bit difficult, but these are just how we communicate what the software, what the product is. They are large, growing, and passionate customer base. They have enterprise, 23% of enterprise. So this is me kind of dissecting what's their revenue flow. Is it lumpy? It's not lumpy at all. It's very smooth because they're diversified between enterprise, middle market, and SMB. Very smooth. I like that. And if the beauty that a lot of people don't know is that if you have a lot of enterprise customers, right, your reach is low. But if you have a lot of SMB customers, your reach is far, right? So they have the best of both worlds. They have really high spending customers as well as far reaching. So that's a powerful combination for something like an SMB appreciating to enterprise. Middle market, and then middle market appreciating to enterprise. So nice to know. I won't read this part. Accelerating platform sales, HCM and FM increasing. We know the bigger macro trend. Long-term growth opportunity. So they are the company that's investing most into R&D. So if they're spending most into R&D, is that hiring? Where are they located? Pleasanton? They got a new office recently too. So the real estate there is pretty compelling compared to the R&D over here. But the funny part is 3 of these are in Silicon Valley, right? I don't know about Ultimate Software, but you see Silicon Valley keeps getting reinvested into. So one of my concerns is that when people want to buy a home, right? There's also, now I'm thinking like a corporation could buy. and they could be the one that outbids you. Like, who do we lose this bid to? Salesforce? you never know. Let's see. I have a few more securities. Are you guys doing okay, or you want me to just go through the last one? So I have I have VMware. Well, VMware's acquisition of Pivotal and Carbon Black. I have FireEye, and I have Cloudera. Okay, those are the three I have left, and then we'll call it a day. So Cloudera. If you guys don't know Cloudera, I've been placing a pretty substantial position on Cloudera. The reason being is that Carl Icahn, a famous money manager, is taking a position in Cloudera. 20%. 20% is very substantial, okay? And he believes it's undervalued. And when I look at the numbers too, I honestly believe Cloudera is undervalued. And I think it's here in either San Francisco or Mountain View or Palo Alto, one of those. They have no debt, and they're very close to book value, 1.65, not far from enterprise value. And price to sales is only 3.7, right? And the thing is, it's not really reflecting the true sales, okay? Because what you see right here says 400 million, but keep in mind they acquired Hortonworks, which is another 300 million. So 400 plus 300, almost $1 billion, right? 700 million. Their revenue growth is 33% on the Cloudera side. On the Hortonworks side is 42%, right? 87% margin, and again with another 87%. That's typical software for you. 586 customers with 100K contracts and 259 100K contracts. Those are substantial contracts. Greater than 1,300 customers and 1,400 customers. There is significant value that just got synergistically created in this, but I don't think the market's truly recognized it yet. So it was a big win with the earnings, the discipline, right? But I sold out, and now I wish I held that same big position. But it's hard. It's not easy. On top of that, a lot of world-class VCs are around this. Greylock is part of this as well. It's part of the bigger data play, right? Data analytics platform, so solid play. This is the announcement right here. Cloudera and Carl Icahn announced agreement. 812, parties implement standstill agreement. What do they agree on? The Icahn Group will also limit its beneficial ownership of Cloudera securities to just 20%. Well, I shouldn't say just 20%, that's substantial. 20% of outstanding common stock, and abide by customer standstill provisions and voting commitments effective as the date of this agreement. So that to me is, this is a nice one. I like this one a lot. It's relatively small, 3 billion market cap. If you were to ask me realistically, where would it be priced in this market today? If I give you like a humble pricing, I'd probably say $20 to $25. That's the more accurate pricing in today's markets. So, but I think it could go higher than that, to be honest, within time. So that's Cloudera. So if you look at the Cloudera Hortonworks investors, on the Hortonworks side, they have Benchmark, Index Ventures, Dragoneer, Hewlett Packard, BlackRock, Passport Capital, TA Capital, and Excel. On the Cloudera side, you have Excel, Greylock. So who else do I know? Ignition, GV, Google Ventures, T Rowe, SB Angel, SharesPost. Wow, SharesPost got a position too. Huh. So that's the thesis on this. So I like this one. This one's yeah, I think it's a good one. It's relatively undervalued. Carl Icahn thinks so, enough to take a 20% position, backed by world-class VCs. We just didn't look at who were the big-time public market holders, and we didn't do the TA on it, the technical analysis on it. Looking over at, this is from last week, and I figured I could just read it through right here. So VMware, guys, they acquired the securities that I thought were multi-baggers. Pivotal is one, but I wasn't in position with Pivotal. I was in position with Carbon Black, so they took Carbon Black away from us. That's the sad part. So whenever another entity buys something, then the main one goes down. So VMware is the main one, and then Carbon Black goes up because they're getting bought out. The earnings call, this is getting more into bigger trends here. The CEO believes that the multi-cloud is the new model for enterprise IT. Digital transformation driving accelerated pace of cloud-native app development. Security has become a significant challenge and priority. If it's becoming a significant challenge and priority, so Palo Alto Networks and Mobile Iron and BlackBerry are in great position, right? But so much that they acquired Carbon Black. So Carbon Black for cybersecurity platform, and then this one for Kubernetes, Pivotal. So this is the Carbon Black chart right here. You see, we were watching this at 14, believe it or not. That's crazy, huh? This was supposed to go to 100. Yeah, that's carbon black. This is pivotal right here. I wasn't watching this one too hard, but it was on the radar. But this is what happened. So $8 all the way to 15. Bigger chart. I like to save these for like later if I ever need to go back on it. I won't read this part. Skip through this. Yeah, I won't read what the CEO comments. This is the main strategy. I won't read that. Let's go to the last one. Okay. It seems like today is like a cybersecurity day, but this is the very last one. All right. And it's a deep analysis of FireEye. So this was actually meant to be for last week, but I didn't have time. So the main thesis about FireEye for me is, again, it's cybersecurity. It's located right next to Cisco, right? Kind of like taunting the Cisco, like, hey, acquire me. Yeah, really. It's beat down. Look at the stock right here. It's beat down very low. And the CEO is actually increasing position size. So the CEO is actually buying more, if I recall. So if you put in FireEye right here, I'm getting significantly interested in this. I just don't know when the timing of a potential acquisition, but I truly believe that this is a acquisition target. Not necessarily it'll get acquired, but it's good chance right here. So if you look at the market cap, it's only $3 billion. A lot of these bigger enterprises have like 100 billion, 50 billion, 40 billion, 20 billion on the balance sheet that are okay to give away $3 billion, right? It's priced below market valuations. In this market, it should be about 5 times higher than this. This should be easily $30, but it's not. If you could withstand the pains of a downtrend, because we don't know how much lower it could go, I think this is a solid play, right? Margins are thick. They do have some debt, which is not nice. Maybe not nice, meaning a company might not acquire them. But let's see the shareholders on this. So let's see, FireEye, and we'll call it a day. So FireEye, we will look at the insider and see how much high conviction the CEO has. So this is Kevin right here, Kevin Mandia. If anyone knows him in here, because they're all local. Isn't that interesting? Right? It's Kevin Mandia, CEO of FireEye, right? He holds 3 million shares, and he is a big direct holder, not so much big fund holder. So I like that when I look at a security and see that the guy who is piloting the ship or the captain at the helm is holding a lot of shares. So he's holding a significant position, which reinforces it for me. Let's see what else can we look at. And we could look at some funds out there as well. But overall, I think the analysis here tells me that it's a great position to make some good money. Shapiro Capital Management is the biggest holder, 15 million shares. Okay, and what type of style does this guy or person play? They're managing 4.5 billion, and their biggest shares position, and we'll do the value as well. The biggest shares position is CZR, so this is a commercial real estate. FireEye is their biggest application. So let's filter it and just do technology. Their biggest technology is FireEye at 15 million shares. Now, that's from a shares view, right? If we go over the value, the biggest one is also FireEye. So that's reinforcing of the investment thesis, I feel. Someone that's managing 4.5 billion, we just kind of rob some insights from them and kind of see where we could play this next. Looking over here, what do the fundamentals look like? And we'll do it real quick and then call it a day. So the red line is the gross margin. So margins are going down, which is not good. But the shareholders' equity is going up. So there's balance sheet value that's going up. Stock price is kind of going down, and revenue is kind of going sideways. So that's the situation. Balance sheet is expanding, good indication of value. Margins going lower equals not so good. Price and primary trend still down. I would think margins are going down maybe because of pricing competition or maybe accumulating debt, but that's what I'm thinking. Price estimate. Well, I already told you that one. Look at that. We were looking at the public holders, and let's see what else. The biggest holder, we looked at their fund already, and I guess that's it. The last part, the VCs invested in them. Sequoia Capital, Northwest, Juniper Networks, and then also a Forrester leader.
Right.
All right, it's 12:30.
So based on the K statistic, that means either Mobile Iron, CrowdStrike, FireEye, or Cloudera will be bought within 3 months.
Cloudera, probabilistically, out of all those, Mobile Iron will probably be the most highest acquisition target because it's the cheapest.
So like I say, if you load up with 20 of them, you only have to guess right on 2 or 3 of them. And if
load up with some options, and you'd be better off, man.
Right,
Yeah.
right.
Yeah. All right, guys. Thanks for coming to my lecture 131. It was truly a cybersecurity day. So.
That's a really good meeting.
Hey, thank you.
Hey, what's with your mixer? What's with the agenda for that one?
Yeah, so this is the next one. It's on Friday. You guys are welcome to come out. It looks like this, if you're wondering. Again, if you were inspired by, if you want to build a business and network, it helps to know high-quality people here in Silicon Valley.
So who's the Yang Wu? He does about.
Oh, so he's the partner that I work with.
Oh,
so
okay.
it's actually his infrastructure that I'm leveraging.
Oh, I see.
Yeah. So, yeah, this guy basically runs his own incubator, man.
Fascinating.
Chinese incubator. Well, Chinese people have to invest too, right?
I don't know. Hey, what's right?
Yeah. If you guys have any questions or concerns, let me know. But thanks for coming, and nice to meet some new people here too. Yeah.
Hey, it was really good.
Is this your first time? Or?
Yeah.
Okay, I thought I might have saw you somewhere before.
No,
Is that
no,
the
no.
mixer or anything?
No.
Well, nice to meet you. I'm Kay.
Hey, you take that.
Yeah.
Nice to meet you. So I had a quick question. So how about the previous sessions? Can we get so you told us like to text you